Hello and welcome to another live with me, Christian Rauchwald, on this beautiful or not so beautiful Friday evening or afternoon or Friday. I hope you all had a great week. We are going to spend our time as always trying to label Elliott wave or trying to label the GameStop chart and a few other charts today using Elliott wave theory, which is taught in this book, and you can find that book by following the link in the description down below. You can read it for free online. There's also a one-page cheat sheet that you can find, which is quite useful after you at least went through chapter 1 of the book. And yeah, so that's what we're going to do. And for that, I'm gonna push a magic button here and share my screen. Now you can see my eToro portfolio that took quite a decent hit actually, considering the start in January this year. I'm not sure if I already mentioned it in our stream on Monday, but basically, I mean, we can see that we have like from the 66% January return that mostly were GameStop. Like we lost a lot of it. And I'm not sure if I mentioned it, but I basically closed all other positions for now. Simply because I want to relabel everything and adjust the strategy that I'm using in this portfolio. Now, overall, GameStop had an interesting week. Now, today, pre-market suggests that it will open a little lower where everything else is green. Which doesn't really matter for us. Pre-market prices, we'll see where it goes. And with that, we jump into Motive Wave. Now, one thing you might or might not notice here, or you might know based on previous streams, that I used to have a data source issue using my sources from Interactive Broker, and to visualize that, we're gonna take an example where I used to have that issue. If we go here and we look at Tesla or we look at Apple, I think was a better example in the monthly chart since IPO, that's how it's supposed to look like, and that's how you can also label it. And if we go here, and I'm quickly going to look for Apple at Interactive Brokers. I hope I still have the data feed since I canceled those. But yeah, so if we look at this monthly, we can see that this here doesn't look like that here. Yeah, so somehow the data feed from Interactive Broker, no matter which source I use from Interactive Brokers or which exchange, I either only get parts of the data, so not the full history, or I get the older data. I don't know where it starts to become inaccurate, but at some point then it apparently doesn't adjust for or consider historical stock splits, or for some other reason, like it just is offered. Now, obviously, that was a problem during our last streams when we labeled other stocks, and then we noticed, again, Apple should look like this, but look like that, because if we would label this, we would have wave 1, 2, likely, because we have the lows always getting lower, whereas if we look like this, we could technically have wave 1, 2. Yeah, now not that this is the case here, but just saying. And yeah, so as a result now, we're going to remove that. I actually signed up at Bar Chart again, which is a separate data provider, and costs me now $64 per month. We're going to have to see if I need to upgrade the package for some other sources, but basically they have the data the way it's supposed to be. Looks like there's still a little bit missing from here maybe. Or I'm looking at months. So that here starts at 84 with a high of 0.12 in October 84, and here we have, okay, so there's still a little data missing here. Yeah, October 84, high 0.12, October 84. Yeah, so looks like there's still a few months missing for this stock, for example, but overall we have more accurate data. Now, hi Eli, good morning to you as well. And yeah, so we're gonna today, actually, when we have time, if there's not too much movement in GameStop, we're gonna take the time and try to label a few of the top 50 stocks within the Standard & Poor's 500. We might also look at the top 10 cryptos, although based on market capitalization, and maybe at a few ETFs, also based on what's it called, assets under management, so or how much money is in those ETFs right now. And yeah, and besides that, obviously, we're going to look at GameStop. Now, before we jump at GameStop, we also looked at AMC. And there, because I also switched the data source, so I had to relabel it. And the last time we labeled it, our assumption was that I think that this here is wave 1, and that the long part here could be wave 2 with a zigzag, another zigzag, and now followed by a triangle, which would go A, B, C. Obviously, with that breakout here, that's not the case anymore. I'm not sure yet about this labeling. Maybe throughout the day we might look into it. But it's possible that, similar to GameStop, that we have some kind of 1, 2, 3, 4 truncated fifth wave here, which makes up wave number 1 and would indicate that this is wave number 2, where we technically could have like a zigzag A, B, C, and this could be, which would then obviously means that this point 2 here would actually be here. Yeah, and sorry for that. Let's first move that, and then so that point 2 would then be here, and this would be the start of a new impulse wave 1, 2, and we would currently be on our way for wave 3, which would indicate that we have more upside, because using Kennedy channeling technique, wave 3 would expect us to have like a move out of here, not just briefly, but actually go out of that channel. And yeah, so, but we will look into that. That labeling is kind of like just on first glance, nothing here is confirmed, it's just an idea. And in GameStop, we basically have our, let's zoom in a little bit to hourly. So we still have our triangle pattern. So from the high at 348.50, we had the zigzag correction down to 118.62, then followed by zigzag up, which makes up the first correction and the first whatever wave X in this double free corrective pattern, followed by this triangle pattern. Now, why are we so sure that this is a triangle pattern? Because it literally follows the also the Fibonacci relationships on spot, where this wave A of the triangle, or well, let's say where this wave C of the triangle is exactly 61.8% of, or pretty much exactly 61.8% of wave A of the triangle, which would indicate that our next stop would actually be 170 or 173, because there's also, if we use the Elliott wave theory book on page number 139, the distance of wave A to B, so, or not distance, but if we measure this here, it should be 61.8. Yeah, so this should be 61.8, which would not be 173, it would actually be 170 quite exactly. I mean, if it really falls exactly on the spot, so it would be 170, which is interesting for us because we yesterday had a great day, or actually the last 2 days, we had this upwards movement here, where we already got quite close to 170. Now, which brings us actually to some kind of like challenge, because this here, or we know 4 out of 5 waves in a triangle, or in this kind of triangle, need to be zigzags. Now, this can be some weird A, B, C zigzag, not perfect, but still okay. This could be A, B, C, or A, B, C, and it's like, yeah, let's try to label those and see how perfect they are in terms of wave A to wave C. So if this would be, and then usually wave C is a more complex correction, so like a double zigzag or some other thing, but could still be something along the lines, we're gonna have to check, but could be something along the lines of this, although here it's 165.50, and that point here is probably, let's check, okay, that point here is 167.41, and then point here is 165.50. So not super perfect, because here that point is lower, which technically would force us to put this here. But we're going to keep it here for now for the looks, and which means if that were the case, so, and just roughly compare or check that, so then this here, it's not perfect. We see that in time was a little longer and in price a little lower, which could technically, yeah, like, don't think we can label that much better, although we would have to, because that would also need to be a zigzag in between, although it could be on a lower time frame. So I'm gonna leave that for now like this. Now if we have this here, yeah, we see in price it's almost perfect, in time it's very close, And if we look at this, we see that in price it's very close, so we're like $4 off, but in time it's not. And my point being is that we are likely here to expect a zigzag pattern. Now, in order to have a zigzag pattern, we would have an impulse 1, 2, 3, 4, 5. So followed by another zigzag, A, B, C, followed by another impulse. And so if this would be our wave A of the zigzag, then logically, or in a perfect zigzag, we would expect that we reach that point D, which might not be here tomorrow. So that might not be that we reach that tomorrow. It could be a little earlier, it could be a little later. But in a perfect zigzag, we pretty much would have our point D, which again should be at 170 actually. So let's move that a little bit to see where we get to that 170 on the line. So roughly here. So could be, yeah, I'm gonna not move that forward for now. So undo. Why does it not? Okay, cannot move it back. Okay, anyway, so basically we would expect wave A and then a steep drop. So if wave C of the zigzag will be the same identical length, doesn't matter about the time, but about the price, then we would expect that we basically, yeah, like drop quite far again. So to, in the end, still have the same length now. And that makes it tricky because our wave E, although it's projected for here, wave E should be 6.8 of wave B to C. No, wave E should be 6.8 of B to C. Let's check. So B to C. Yeah. So if we take this here, our wave E should be at the 6.18 retracement, which would be, as we can see, at 140. So this point here needs to go to roughly 140. And if we, it should stay within the line and so on. So it may be technically, for example, here. Now, hi Jeff, hi Nick, great to have you here. So why is this relevant? Because it's obviously gonna confuse us a little bit, because we expect our point E to be at, or we expected our point D to be around 170, and we already got very close to it. And we expect our point E to be at 140. And as said, if this here turns out to be a zigzag, A, B, C, and it's a perfect zigzag, we actually would probably today see a drop. Or maybe it doesn't finish today, maybe today we see a small drop, because that wave in between also should subdivide into a zigzag. So it could be today we see a drop, it goes up a little, and then tomorrow we finish that zigzag. And it should actually come very close here again to this line at 140. And so if that happens, we would be tempted actually to see, oh, that's already wave E. So we have B, C, D, E, when in fact it would only be wave B of that zigzag in here. Yeah, so we're gonna have to keep an eye on this. Hi Michael, great to have you here. I actually don't want to go, or don't want to see it go up today, because if that were the case, then our labeling would again be wrong, because we still are missing our wave E, and I don't think that this was our wave D, because in time it's too short compared to the other waves, and it should turn out to be a zigzag. Now, technically, I could probably, if I wanted to, say something like A, B, yeah, like and C then here. But it would get challenging to confirm that. So, and it fell a little short of the target for a perfect zigzag. So that's going to make it tricky. It could be, again, we expect our point E to be at around 140. So if this here is already the entire wave D, which I doubt, to be honest, then first of all, that channel here wouldn't look like this, but it would look like, or that line here would look like this. And yeah, if this is only the first wave of the zigzag, so A, B, and then C, to complete that wave D, then we would anyway expect a steep drop, potentially as far as down to that trend line. And that's going to make it a little tricky to figure out what's actually the case here. So if we go up, so if we just go up here, then yeah, then I'm officially probably out of ideas, like, because then maybe our original, if we would go up here, then it would indicate that our original labeling was correct, where this was not a double free, but where this was just a triangle with A, B, C, D, E. However, the Fibonacci relationships of each wave were not by far not as accurate or as close to how they are supposed to be for a triangle like they are now, because as mentioned, if we measure this wave A here, and the distance here is like literally, like in the book, precisely 61.8% of that wave A. And that's why I think that labeling is the correct version of it. And that's why I actually expect that from here we drop to make wave B of that zigzag, then we go up to finish wave D, then we drop again and to make wave E, and then we have our breakout. Now overall, if that plays out like this, we would look at early June for the breakout right now. So obviously time is not super accurate with Elliott wave theory, but we still would need the time for finishing this wave down here, and then finishing a wave up here. And obviously that wave down here would need to divide into another zigzag, so A, B, C. That wave up here would need to divide into another impulse, so 1, 2, 3, 4, 5. And then the wave down here should again divide into a zigzag, which by itself divides then again into an impulse, zigzag, and another impulse. So yeah, and all of that requires a certain amount of candles to play out. So yeah, that's why I don't think that it will play out like this. Hi Osama, great to have you here. I'm not sure, I remember if either your labeling suggested the double free corrective pattern with zigzag, triangle, or if it was George. But one of you two guys suggested it last week. And I think we really have that, when did we have the last stream before this point here, where we said it should go down to 37, yeah? And it literally nailed that point. So we went to 136.50, yeah? And yeah, so assuming, I mean, we still have to watch how this plays out, but I'm based on, or let's say depending on how this plays out, we actually would learn another very important lesson, that we need to pay more attention to the Fibonacci relationships, and if they don't add up properly, then our labeling is likely wrong. Yeah. Okay. Yeah, it was you. Yeah. So thank you for that, because it literally hit the nail on the spot. Yeah. And again, like if it plays out now like this, that we have point D at around 170. Could theoretically be here already, but I don't believe that because of the length of each wave. So like here and here and here, there seems to be some, I don't know, like how long did this take? That was like 2 days. And then if we go from here to, yeah, it's another 2 days for this wave. And the first one was a little longer. Yeah, but slightly more than 2 days. So we would actually expect that our wave D will also finish in around 2 days, maybe a little sooner. Yeah, that would be the point for 170. And then we likely probably, I don't know, then we probably would expect that our wave E may also take another 2 days, which would take us to the 9th of June or so for point E actually. Although based on the price level that we should reach, it has to be a little bit earlier. So, I mean, I may be wrong. We will see how it turns out. So, but yeah, so for those of you that joined late, I started early, I think, today. I quickly want to point out I got my data issues fixed. So for other charts like Apple and so on, we finally have historically accurate data. I'm not using the data source from Interactive Broker anymore, but I signed up at Barchart again. So basically I canceled the data feed subscriptions from Interactive Broker, and Barchart finally provides historically accurate data, which means we can look at a few other stocks today and see how we can label them. Maybe at a few cryptocurrencies, and yeah, so that's where we are. No, yeah. Besides that, how was everyone's week? So, like, I mean, I'm sure everyone was happy with the development we saw in GameStop, especially yesterday. But besides that, what have you guys been up to, and how is it going? So. Please not everyone at once. So made a little money on AMC and playing volatility going good. That's great to hear. That's great to hear. I'm not sure I mentioned, or I think we mentioned it. I think it was during our last stream that I mentioned that we finally hired our first full-time developer. He's going to start on Monday, so it's going to be an interesting week ahead. Happy to wait with GameStop, getting antsy about AMC though. Congrats, hiring good developers is hard. It's one of the bigger parts of my job. Yeah, like the first person we hired was actually a full-time designer, and in March, so that we have like somebody that creates the prototypes and everything for our relaunch that we want to do with our software. And that already has been a challenge and still is a challenge, to be honest. And with the developer, it's kind of like, obviously we gave them a test task and so on. We focused a lot on their English skills so that we can communicate properly. But it still is more like a coin toss, you know, like, I mean, eventually we'll see how that person fits into the team and how the skills that he showed in his test task, like where he kind of like, yeah, like maybe where theoretically you could have somebody else help you and so on, how it actually will then be in the job. So fingers crossed that we don't have to look for a replacement and that it works out with him. But yeah, like another step in the right direction. I don't envy people that have to work in HR and constantly do that. Yeah, it's like super, super annoying to look for the right employees. Yeah. It's probably the same the other way around. If you're looking for a job and you're dealing with HR people and applying and so on, it's also annoying. So yeah. But yeah, and besides that, yeah, not much happened. We also, as mentioned, hired our content manager and community manager, but he'll start in June. So unless something comes up, but fairly confident that nothing changes there. And with that, I will have a little bit more free time to take care of all the things that I neglect and so on, yeah. And yeah, so other than that, yeah. David, welcome back. Great to have you here. And yeah, and about AMC, I mentioned it earlier. I'm not sure if you checked it. So because I have a new data source, I had to relabel. And initially we had it labeled as 1, and maybe this is wave 2, similar to GameStop. But today when I relabeled it, I thought, what about this being same like GameStop, 1, 2, 3, 4, and extended 5th wave, which makes this then wave 1, since we can only label it from the January low, because everything before that, if we show, is a drop down. So impossible to label or very hard to label. And and back to daily. And as a result, then the correction would be from the low in March 18th. And then this could be a simple zigzag correction, and we already are in the impulse of wave 1, 2, which yesterday's move would actually support that idea. Where before our idea was that this is also a triangle, like in GameStop, with like A, B, C, yeah, but obviously this candle here invalidates that theory. So there we might actually look at some strong movement now. So curious to see how that plays out. I'm not gonna buy it because I'm not super confident in the count. And yeah, as you know, my personal outlook for AMC based on their business case is not super bullish. But based on Elliott wave theory, that's, I think, something that's possible right now. So that we had basically wave 2 end here. And there we, like, it's hard to confirm that we have an impulse down here unless we look closer. But we can definitely label a B, C zigzag in between here. And yeah, like that might, if we look closer, turn out also as an impulse. So could also be, or hardly actually, like, yeah, like in terms of size and so on, I think that actually checks out here. So a new day starts here. Doesn't mean that AMC should go up today, but I think the overall thing is that we would have this base channel now here in AMC. And basically, well, we could still go a little lower, but it would already indicate that we're around the third wave move and that we kind of like go up from here further. Don't know how far exactly. For that, we would need to learn a little bit more and look a little bit more about the Fibonacci, or look a little bit more into the Fibonacci relationships between different waves, which is, I think, chapter 4 in the book. And yeah, but should go up a little bit more. Eventually, we should drop down, however, to that base channel, and then from here go up. Now, and one other stock that I love to look at would be Tesla, which we couldn't do in Motive Wave so far because of the historical data that was off. But now that I have accurate data, we actually can look at something quite interesting. I'm going to get rid of those channels real quick, yeah. And so if we would have, since IPO, if this would be our wave 1, 2, then that would be our base channel. And we know, based on Kennedy channeling technique, that very often, not always, wave 4 will touch the top or sometimes the medium or the bottom of that base channel, which happened here. Yeah. Now we also know with Kennedy channeling technique, we would have basically our, like that would kind of be like our acceleration channel, where we would then have to adjust it to fit here, and then this point is higher and we would have to adjust it. But basically here would be the point where we would, based on Kennedy channeling technique, be clear about that it's a fourth wave move. Probably without Kennedy channeling technique, we would already realize it somewhere here, that it's like a sideways corrective pattern. However, at some point we get our wave 3. I didn't confirm this labeling by labeling waves of lower degree. It's just what checks out the most, because if we now have our wave 3 and our wave 4, we can draw our so-called destination channel, which gives us a profit target for wave number 5, which we hit here and then we bounce off. Yeah. Now the interesting thing is, like, just like with our base channel, so if we draw our base channel, as mentioned, often wave 4 will touch the base channel and turn around, but sometimes that's not the case. And then what you can do is you can copy the base channel and basically just extend it. So you would add the same width, and in that case, then the wave 4 at least, or still very often, touches the line here. So at least the duplicate width of the base channel. Yeah. Now, if we do the same here, so if we have our destination channel and we touched it, so that would be profit target, we bounced off and then we shot through, and that was actually a squeeze that happened here, if I'm not mistaken. So there was like at least a few of those candles are based on a squeeze. What we can do now, however, is we can take the same approach, so we duplicate our channel, and we can see that the movement exactly or stopped pretty much by hitting the twice that range. So that's where our wave 5 ends. That's why I'm quite confident that this is really 1, 2, 3, 4, 5, which means here at 900, not only does the smaller 1, 2, 3, 4, 5 end, but the bigger one as well. And although here that 3, 4 might be wrong and 3 and 4 might be here, it doesn't really matter. But the point being is that based on that, we would actually, as mentioned in Tesla, expect a bigger correction. I'm not even sure if I want to expect something like that, because it's literally talking about market crash and wiping out 90% of the stock's value. However, on the other hand, if we consider that this is now, so this is wave 5, which means by definition from right tool, from here to here is wave 1 of a bigger degree. And obviously, if we only fall down, if our correction as predicted or as currently projected by me would end at 460, well, that wouldn't make wave 1 and wave 2. That's not wave 2. That's not big enough, which means in Tesla, assuming that this labeling is correct, I honestly have no idea how far it will fall. I would, if we take some of the guidelines that we use often, like between the area of 38.2 and 61.8, would be devastating for the stock, yeah. Or between the, or into the area of wave 3 and 4 of the previous impulse wave of a lower degree, which would be between 36 and 73. Also, it is in the same area, interestingly enough, yeah, and it would still be devastating for the stock. So I'm not sure if I'm gonna start buying at 460 like I planned, because if this labeling is correct, we might revisit it at some point. Then I'd actually would expect, yeah, like Tesla to have a very, very rough time ahead, and it would not be, well, this might still be an ABC pattern, yeah. Looking on this scale here, or maybe from monthly going to weekly, we might be able to just label this as, if we go to weekly, we might be able to just label this as 1, 2, 3, 4, 5, which is then wave A of the zigzag, wave B, and then wave C, yeah. And suddenly we are down at $100 or less per Tesla shares. And we would have a correction that's big enough. However, we would also, if we look from here, we would be talking about Tesla having a correction for, yeah, like at least a year. For that to play out, we're talking about at least a year to finish that correction, which kind of like aligns with something I saw from, not sure if I mentioned it in the last stream, from Robert Prechter, the guy that co-wrote or actually wrote the Elliott Wave book together with H.A. Frost. And he actually expects a market crash this year or next year. And yeah, I think we talked about it in the last stream and looked at a few charts. So while it's an unbelievable scenario, yeah, something we don't want to believe, yeah, if this labeling is correct, either I'm missing something, I forgot some of the rules that are mentioned in the book or so, or there's some other explanation, but then obviously a drop to 460 or even a drop to 300 would not be enough to really say, okay, this is a wave 2, yeah, so it's just not significant enough to justify, okay, 1, 2. So, however, if we would drop till here, or maybe even, I don't know, maybe even 140 or so, that would make it probably significant enough. Like, I mean, what other Fibonacci retracements do we have here that we could hit? Yeah, like, yeah, I think 100 would be the point where maybe, yeah. And then if this labeling here were correct, so if the 1, 2, 3, 4 actually would be here with an extended fifth wave, then it would also fall again like, okay, the retracement here falls into the area of wave and 3, 4 of the previous degree. So if we fall to 100, or actually the sweet spot would probably be 75, where we touch this wave 3, 4 and are within that one, which is even a smaller degree. So it's gonna be interesting to see, like. But I think in the near future, a lot of people will get burned financially. Like there will be a lot of portfolios that get wiped out, and might be wrong. Yeah, maybe it's just me seeing what I want to see or what I hope to see based on yeah, Robert Prechter's announcement. And yeah, but so yeah, for GameStop, so we assume we have two options. One that I consider unlikely, and that is that. That this is already point D, so that it won't be here, but that was already point D. I consider it unlikely because we would need to fit a zigzag in here and also confirm it, while we might be able to have something like 1, 2, 3, 4, 5 here to make this wave C of a zigzag. But then we would also need to be able to fit another 1, 2, 3, 4, 5. Might actually work out, especially if we consider that this also is a zigzag ABC. Yeah? So it might be, not sure if the labeling will want to do it properly. Yeah, no, but it might be that this is not an impulse, but some kind of leading diagonal. 1, 2, 3, 4, 4, 5, and especially since 5 here is 149 something, and here, okay, that point was higher, so that cannot be okay. So 148, 149, 43, and that point here was 150. Okay, so that cannot be diagonal or any kind of wave till here. So why did you, interesting. Why did it jump now back to hourly? Weird. So more likely that this is 1, 2, 3, and it would also be actually supported by a zigzag. Very often the wave A is like a steeper drop. So, and if this here is a zigzag, so that's wave A of the zigzag, in that case we have some strong movement up. But then as part of that zigzag we would have another zigzag here, which would be wave B of the zigzag. So which means we would look at something like, again, A, and then B would take us down here, and again, if it's a perfect zigzag, it would actually play out like if our point D were to be there. Yeah, cannot, likely should be sooner. For a perfect zigzag, it would play out like this, and we would have our point D then here, although our point D would be slightly higher than it's supposed to be. Which means this here would need to play out as another zigzag. So this here would need to subdivide somehow like this. Yeah. If it were perfect, it would, I don't know, like, could also be with smaller upwards movements and so on, but like this. So, and doesn't have to be perfect in time and price. So could be that we have a steep drop here that goes a little further, then we go up a little, and then we go down here. Same price difference roughly, but a longer time factor. So yeah, and that's what we're looking at right now. So I think this option is more likely, which obviously again gives us the problem. If this were already our point D, then this would actually not be the end of the wave B of the zigzag, but would be by definition then our point E. And yeah, but I consider it unlikely because there's still room for that whole thing here to play out properly. And yeah, what's that line here? Okay, so yeah, and we're just gonna see how that plays out. How is the rest of the market doing so far? So everything goes up and GameStop goes down. Yeah, but no big winners here. Actually only need GameStop and Tesla on that list here. Also, okay, Celios, yeah, I just wanted to say, I just want to mention that I was texting with Celios, who is also doing Elliott wave theory, and he's also using motive wave, and we like compared some of our labeling and so on, and I think to most parts we actually share the same opinion. And he just shared something interesting that I didn't know about motive wave. Apparently we can save our labeling, so we can give it a name, and we see we have our primary analysis, and then we can basically have multiple labelings and switch between them to see which one works out first. So yeah, huge thanks to Celios Celos, not Celios, for pointing that out and explaining that. I never discovered that feature, but it's obviously very useful, which means we can think about an alternative wave count. So, and yeah, that would be primary, so save, and then we would say new, and we would say alternative count. Cool, and we get new tabs in between. Oh my god, that's so amazing. I just love motive wave. And yeah, and so based on that, we could, for example, go back to the assumption that we had. So if we get rid of all that, and where our assumption was that we just have a triangle from here to here, and which would then be our wave 4. And where then likely this here would actually be, yeah. Oh, look, it labels as an impulse, surprise, surprise. But where this, yeah, we don't need it on that small degree, but where this likely would be wave 1 of the next smaller impulse, and where we don't basically would expect it to, yeah, so like either touch 38.2 and go up from here, or fall into that area and go up from there. So, up, go back. So now we have basically, and we can save that, so now we have basically 2 counts here, and we're also going to switch to 5-minute count here. Up. And I think that's really cool, because now we can maintain multiple counts and based on the development see which one is more likely. Now I said I like this count more because it nails the Fibonacci relationships, but yeah, we will see which one turns out to be accurate. I'm just going to reply to Silos. Yeah, and so do you believe that there's still going to be a dip? Well, I think depending on our counts, so the primary count that we have here, and I'm also going to hide the other stuff, and I'm probably going to move my camera somewhere so you guys can, yeah, if we're looking for upwards movement, then I'm going to put the camera here. And so depending on our count, if this is our count, let's go hourly, which hourly, no, not enough, daily. I mean, weekly. Great, so it changes just the eagle eye view, but not the chart. Let's close the eagle eye view and try again. Okay, so apparently that stuff stops working when we're using multiple counts, so we have to change it here, which also doesn't work. Is that because we now have different, I mean, it says here that we have GameStop hourly, but we're still looking at the, and in the alternate count, if I switch it here, so here it switches, okay, so I somehow need to probably, declare this one as active or so that when we see that it switches for the alternate count, yeah, so how do I now say that this one here is my active one? New analysis. Ha. Ha 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 ha. God, I love those technical issues. How do I tell that stupid chart that I'm basically now focusing on this one? And especially even if I change it here, it still changes the alternative count and not this one, so. Ah, okay, so that's the trick. So here I can switch likely. Yeah, that's how it works. So again, so question was, by the way, hi Collins, hi Jay, hi Noah, great to have you all here. And so if we will see a dip, now if our count here is correct, then we would see another dip and potentially going down to the line at 140 before we go up to 170 again, and then another dip that takes us again to 140 before we go, and potentially a few dollars below that before we go up and actually finish that corrective pattern. Now, if we go with our alternative count here, then, and also switch to hourly, now that works fine, then we would say that the triangle already finished here, and this here, what we are just seeing is wave 1, 2 of the next impulse that's going up. In this case, we wouldn't see a dip anymore, so we would literally expect it to go up from here. How far doesn't really matter right now, and then drop down to that base channel and then go up further, which will then turn out to be wave 1 of a bigger degree, which follows again by a corrective pattern, but which should then only go into this area again, and then up again and so on. So it depends on which of our counts is correct. Personally, the count that we have here is more accurate because, first of all, the zigzag that we have here is literally perfect. So we see that wave C is almost, or yeah, like it's like $4 away from being perfect in price, and is almost perfect in time. Yeah, delete that. Please delete that. Why can I not delete that now? Okay, so like that's a bit of a dumb feature here, because if we don't switch, I can't draw on the chart, but I cannot delete stuff. Anyway, so then that zigzag up here is also almost perfect. It's a little bit harder to show, but here, so if we take point Z, point A, and then we try to put that, then we see like point B up. Point B is at 154, and here the point is at 147. So it's a few dollars off, but it's still okay-ish. And then if we look at the triangle up there, we have the Fibonacci relationships. Again, like this wave B to C is supposed to be 61.8% of this wave A, and we see it's like on the spot. So like plus minus a few cents. So this labeling here so far, in my opinion, follows the rules much better, whereas, so again, and switch here to alternative. So I need to use this to switch like Y. Is there a setting to automatically do that? Probably not. Yeah, anyway, so in the alternative count, we have the problem that this would be our wave A, and which means that this wave here should be 61.8%, and we see it's not even 50%. Yeah, and on top of that, while a breakout, so when we draw our channels here for the triangle, while it's common in reality or in real life that we see a small breakout to the bottom before we go up after wave E, or so after the triangle, I don't think that it's like okay to have it that big. So when we look at the examples that we can find in the book, then it might also appear like that it's bigger, but then it's usually on yearly charts and signify, and the triangle itself is also bigger in definition. So I think that breakout here would be too big to confirm this pattern. But yeah, so with this pattern there wouldn't be a dip anymore, but I expect that one actually to be the pattern that is not accurate. And with this pattern here, we would see basically right now a dip developing that might take us down again to 140. Doesn't have to, but if it's a perfect zigzag, it would basically, the wave C here would be the same length as this wave A, which would mean if point D is supposed to be at 170, then it has to go down to 140 again. But it doesn't have to play out as a perfect pattern. Yeah, so like there is some wiggle room here, but I think that pattern here is how it will play out. So we likely are going to see a drop followed by a small recovery for a wave B in that zigzag, and then from there another drop maybe to that line down there, maybe not all the way, and then we will have another impulse going here, and then we can watch the same thing again to go here, and then we're actually through with our correction. So, and okay, now again is switching the wrong. I'm gonna quickly check. There should be something like shortcuts or there are just so many settings in that whole thing. It's like use default, indicators, time, templates, options, watermark, copyright, components, no, keyboard search, blah, 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 no. Huh. That we can actually yeah, so yeah, I will have to keep that in mind for switching between the charts. So yeah, so personally I expect this to play out as 1, 2, as a zigzag. Now if this is a zigzag, then it would turn out as 1, 2, that could be 3, potential 4 would touch the base channel, which could already be this, and then followed by another drop. Now I said like it doesn't have to go that far in terms of time, so based on like, let's check that. So if we look here, our retracement reaches the 61.8% here and goes a little bit further. Our base channel would then look like this. We have a not super big, but breakout still from the base channel. And wave 4 here corrects into the base channel, not to the top line so far, but to the median. So technically it could be that this is like that, and if it were that, then our profit target for our wave 5 would be somewhere on this channel, and yeah, like there. But we would expect to recover, oops, wrong, to recover at least 70% of our wave 4 here. So that would be the minimum somewhere here, but potentially it could be that this plays out similar to this. So because there's also very often symmetry to waves, so the two waves are similar to each other. Now if that would be wave A here, then we would have some kind of zigzag once it finishes, yeah, so it still needs to play out. Then we would have some kind of zigzag going up here, and then followed by a wave B, which would then not go that far down in that case, depending on how this plays out. But yeah, so that's what we're looking at. And I think, yeah, that's the more likely case. But as said, the other option is that basically our triangle finished, and this here from down here to here is wave 1, and that here will turn into wave 2. And for that, if we check here, yeah, like we pretty much nailed the 38.2 retracement. However, if this is wave 2, it still would need to play out as a zigzag. So, and I mean, it might be that it's like A, B, C in some way, and we would need to jump on the 1 minute time frame to even try to confirm that. But more likely then it would still play out as A, B, C, and then the retracement would likely at least hit the 50%, which is more than what we would expect. So again, making the scenario that our alternative count, and here we're going to switch to hourly to just keep track of the pattern. So our alternative count, where we would say this here is wave 1 and currently 2 in progress, actually is less likely because of that. So save and go back to the primary count. So I think more likely that it plays out like this. Yeah. So I have to move that a little bit so we have a little bit wiggle room. Now here also we would have A, B, C. And if it were perfect, if this would be A, then our wave C in that zigzag would actually take us to 162.95, which would then make up our wave 4 at 162.95 roughly. Can move it a little further, maybe the next candle, so 162.95, and then as a result our destination channel looks then a little bit different. Yeah, and as said, we would then expect basically to fall somewhere in here, and yeah, and from here recover with a zigzag and then go down again. Yeah, so anyway, blah blah blah. Noah says Pickle Financial just talked about you. I don't know Pickle Financial, yeah, but probably cool to get some traction or to have other people notice the channel. I hope he said good words or good things, and if not, yeah, can't please everyone. Max Payne today is 152.50, and my thought is the primary account you are showing my puts to. Facecam is in the way. Okay, I missed that. Sorry for that. But now it shouldn't be in the way. So like, not sure where it was in the way. So sorry, I missed that. Yeah. Thanks. When do you expect the 140 approximately? Looking at investing more. Well, the time aspect is the one thing that we really are not good at with Elliott wave theory. So, oops, wrong button here. So we could, there are some relationships, but they don't always have to hold up. So price is one of the least accurate things. So you see here it took 3 days, for example, and then here it also almost took 3 days for this wave, more like 2 days. Then this one, so like this wave A took 3 days, this wave B took almost 3 days, this wave C took almost 3 days. And so we could basically assume that we will reach wave D in also almost 3 days, or maybe 3 days, maybe a little more than 3 days, but actually almost 3 days, like wave A and B, or like wave B and C would check out the best, which means as a result we would then expect that we reach our wave E also within almost 3 days, and we see that would also be the case. So basically June 9th, June 10th. However, with that ABC zigzag that potentially could go down here, yeah, it doesn't have to reach the 140. That's the one important thing here. Like if it plays out to be a perfect zigzag, it would kind of need to, but yeah, like we don't always have the perfect situations here. So there is a chance that we might see a drop that takes us further here already in the near future. But if that triangle pattern plays out like this, it would actually be more roughly based on the length of previous waves, early June. Yeah, and then we have the correction behind us, and we should see stronger upwards movement finally, and yeah, not deal with that endless correction anymore, like that has been torturing us since March 10th. Like it's literally 2 months now dealing just with this. Yeah. Anyway, so back to 5 minutes to see how it plays out. So as said, technically, if this turns out to be a perfect zigzag A, B, C, we would need to go to 162.90, but we don't have to. And it could also be that the pattern here develops a little bit different, that 1, 2, 3, 4, 5 changes a little bit. But so far, it kind of like looks nice enough, yeah. And yeah, and so Max Payne at 152. Yeah, and that would actually, so today would be a small win for the puts, because likely based on our labeling we would finish below the 152. Yeah, there's more than enough time. Actually, tricky to say, like if this really plays out like this, 1, 2, 3, 4, 5, and then we also know that very often we have like 2 waves that are very similar, which would be the case here. So wave 5 and wave 3 would be very similar to each other if we go up here, but even if we don't reach that point before we go down, it still could be very similar, which then means we would be slightly below Max Payne, but then we would have the ABC, which easily could play out also very quickly. And so the question is, if it plays out with this price level here for wave A, and then obviously we have to figure out where that zigzag will go, but then it's possible that we finish above Max Payne. So It's like interesting. Okay, now here we reach the point. Let's see if it shoots further. I'm gonna also add our base channel again. Kennedy channeling technique is, by the way, a useful tool to support, but it's obviously not the I don't know, super highly accurate thing that always applies. Yeah, so. That's interesting development here. Here our low is 163.55, and here our high is already higher, which means this here cannot be an impulse anymore, but it can still be could still be a leading diagonal. However, that's quite a strong move that we're seeing here, and gonna have to wait and see how that turns out. Now, could be that that turns out on a bigger scale. So if we look here, but we probably already are far. Oh no, see 61.8. So it could be that this simply turns out like this. Although then wave 3 would need to go even further and so on. Yeah, so that's gonna be a little tricky here. But then we would need here 1, 2, 3, 4, 5. It's like really tricky to label this small area here still properly. And if that were the case, then this would be wave 1, 2, and 4 up. Wave 1, 2, or 0, 1, or 0, 2, and parallel for 1. So we would need to see a drop that breaks out through here and then goes back, and so challenging here. Yeah, like, I mean, technically I'm not sure if the auto labeling will catch it, but that's already an impulse wave, 1, 2, 3, 4, 5. That here is a nice zigzag, ABC, and the question is, that would be an impulse. So technically could also be that this here, yeah, not till down here in that case, but till here would be a zigzag. Yeah, the colors now change, but basically I'm going to get rid of the smallest labeling here. Obviously not a nice zigzag because wave C is so much bigger than wave A. Which would, however, support the idea of our alternative labeling, because then that would be wave 2, and from here we go up. So it's like really, it's like tough call. Like on one hand, the one thing that really makes me believe in this wave count here, where we still have the triangle to finish, is simply the perfect Fibonacci relationship from wave C to wave A here, and also yeah, like the rest of the pattern, how it looks like. And whereas we just don't have that perfect relationship here. So, but if this were the case, then on a channel line, then there my camera is in the way. That's what you guys meant. Yeah. Okay, let's move it down here. Hope that that works. And so yeah, I need to save this, and switch here again to the alternative. That's like a dumb solution. Like, I mean, it should obviously, when I go here, automatically focus on the chart here. Like, but yeah, so. But that labeling is already, that just doesn't check out, like, in terms of with the breakout of wave E. So like, while we see it in reality often enough that we first have a breakout to the bottom before we break through the top, it's just that this here in relation to all of that here seems too big to me. Yeah, so. But a few more candles here will tell us which is which. Yeah, so put up 5 minutes and again, so if we check here, we're still on the 61.8 level. I would say it's kind of like of a 75% chance that this level or this labeling will play out and the other one will be proven wrong. But only time will tell, yeah. Yeah, thank you. 140 to 145 or even 140 to 150 would be great as well, yeah. Yeah, I mean, I'm not gonna buy more. I think we have now 90 shares or close to 100 or so. I think that's enough. And I want to find the time to label a few of the other stocks and basically adjust my portfolio accordingly. And yeah, then yeah, but kind of like it's I think at some point, well, obviously every share that I buy or every share that somebody else buys and holds is a share that's not available on the market, which makes it harder for, or which should help drive up the price, yeah, because stock price is supply demand. And if we hold the entire supply and there is still demand, people that want to buy, then they have to start to be willing to pay more and so on, yeah. But at some point it turns into greed and unnecessary risk. Like if we, I mean, it's a different, if you expect that GameStop only reaches $1,000, only in quotes $1,000, then, and you're convinced about that, then obviously buying more and more about it makes it likely a highly profitable trade. But if you believe in a short squeeze where we go far beyond $1,000, then even, I don't know, 10 shares or so could already be a life-changing or may already be a life-changing payoff. So, yeah. But for everyone who still has money that they want to throw into GameStop, then obviously, yeah, like you also should hope that our primary labeling with an, again, wrong screen, with again another drop to 140 actually proves accurate. Could that be 1, 2, 3, 4? Yeah, like let's check here. 1, 2, no, 1, 2. Could actually be, it's not nice, but yeah, so it could actually be that this here is, as we see, 1, 2, 3, 4, and 5 would then obviously be the point down here, and which would then mean, and then do we have a nice zigzag up here or not? No. So if this would be point C up here, and well, nice enough, I guess. So then here we would have another 1, 2, 3, 4, 5 that takes us down. That should then be the equal to this, so to 150, yeah. Like, and if we look here, we have another 61.8 retracement almost. So I'll move that a little bit. So yeah, close to the 61.8. So this could be the next 1, 2, and then 3, 4, 5. Although likely this is not 1, 2 yet because we'd like to cover a little bit more ground. Although that would not help us, because if this would be the case, then it would mean that we end at 150 with that correction. Which obviously, you need to zoom out again, like so many waves of different degrees. Which would be okay because we are kind of like, that's wave A of our zigzag, and that's making up wave B of our zigzag, and then we're making up wave C of our zigzag. Okay, obviously for a perfect zigzag it would play out bigger so that the golden or brownish zigzag actually also becomes a perfect one. But even if that were to play out like this, it would be an okayish zigzag. Although that would also be 1, 2, 3, 4, 5 then. So even if we have another impulse down here, we cannot be sure that this wave, that it's the zigzag, but it could also only be 1, 2, 3 of the first impulse that makes up the zigzag. Got like curse and gift at the same time the flexibility of Elliott wave theory. So yeah. And yeah, so save that, and checking my emails on the side. Up, nothing major, great, good, great. It's a pity that we have to watch this today instead of watching the like the upwards movement we saw yesterday, which obviously would have been more fun. Or that was on the 11th, and we were live on the 9th or so, if I'm not mistaken. Yeah, so kind of like missed the fun labeling, or a lot of the fun labeling. All that's also going to be tricky. That also would be tricky to label with that start here. That's kind of big. What do we have here? 147.20 and 137, and that was 136.50. Yeah, so that's obviously slightly wrong here. That's point C, and yeah. And how is the rest of the market doing? Disney is plummeting today, okay, and Tesla is breaking even, okay. And I'm curious if I switch here to another stock, so if we pick Disney, it changes my primary analysis. Ah, that's cool. It keeps 2 tabs for both, so we can label 2 in both. That's kind of like nice. Although there because there I haven't saved it yet. Manage. So there is only the primary. So I would need, if I save that one, I cannot even save that, probably because we haven't changed anything. Oh, now it's saved. Okay, and now I can switch between those two. Cool, 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 cool. Yeah. That's cool. So with every chart, we automatically have that now. Since we're here, gonna double check that here the history is also, so that my new data source is correct. And Disney here starts in 96. Nope. Okay, Disney starts in 68. Okay, I don't think we have that much data here. We have till 87. Yeah. Like, it would be so nice. Edit instrument, connections, historical data, Google. Okay. Let's see if that works out. That looks better, yeah, and looks, what do we have here? The second candle is low 0.50, and here, wait, what? Okay, I'm at 3-month interval. Oh, now I killed my chart again. Okay, hourly. Someday I'm gonna get this data sources figured out. So delete hourly and fetch it new, and then we have to click our way upwards for it to fetch data. Yeah, that's gonna take a moment, unfortunately. And in the meantime, we can check here. So we're still breaking even today. Tesla still doesn't do a lot. And yeah, then check eToro. Hi Predator. Good morning. Can an argument be made that yesterday's wave A is yet to finish? We're gonna check in a second. So for that, we're just gonna, actually quickly gonna just finish up here to see if we can get the full history of Disney here. Again, fingers crossed that someday I actually have accurate data for everything. Now that doesn't look, now that seems like stock splits are not adjusted. So it went up, stock split, went up, stock split, went up, stock split. Yeah. So, okay, using why did it now switch to interactive broker? I said bar chart, historical data, Google, and we. There we go. And then in the monthly, we would have our whatever, like first month would be with a low at 0.65, and here our first month has a low of no. What's that? That's January 68 with a low of 28, and that's okay. There's January 70 with a low of 65. So January 70. Actually, that checks out. So not perfect, but. And you see already the difference that makes, because if we have those previous months, we can say 1, 2, so, or wave 2 might go till here, so a zigzag followed by a zigzag followed by some other kind of correction here, so a double free correction. So 1, 2, and then this up here would be wave 3, maybe till here, that would be wave 4, and then likely this is our wave 5, which would indicate that we also in Disney are looking potentially for a huge drop. And we're missing a few months here, which is like, I wonder how other people use that. Like how do they use not just motive, or how do they use motive wave? Like what kind of data sources are they using to ensure that they have accurate data? Like that's if we just use bar chart, we have data from 87, which would indicate for us 1, 2, and we're still now waiting for wave 3, and we would be like, okay, let's buy more. And whereas obviously when we have the full data, we would see 1, 2, 3, 4, okay, probably we're at wave 5 now, maybe sell, yeah. And so again, so bar chart alone doesn't work, and even if we, so let's try this again, clear local data, yes. So there we just don't get the historical data. And in the calendar, can I go to, I don't know, like 90, 70? 90, 70. Yeah, no, it doesn't do anything. So it's like, and if we edit with Google, so historical data, Google, okay. Then we get not the full picture, it's still a few years missing. But yeah, for Google it makes sense because they obviously use, if you think about computers and the time that you see displayed on your computer and on your iPhone, the time starts on the 1st of January 1970. So there's no unit for, or there would need to be special adjustments for times before 1970, which means using Google as data source, it's likely that every stock will only start in January 1970. Yeah, makes sense. Not that I like it, but makes sense. Anyway, so yeah, so save that and jump back to GameStop. And it's so nice. So again, can an argument be made that yesterday's wave A is yet to finish? So up. I don't think so, because I mean, it's possible, yeah, but if we look here, wave A of a zigzag would be an impulse or a leading diagonal. Now, I labeled it now as an impulse, but if it's like this, it would be a leading diagonal. So where wave 4 retraces into the area of wave number 1, or wave 2, yeah. And it kind of like works out, and even if we look closer, here, if you look roughly, you can, I mean, yeah, I'm gonna label it or show it from the bottom, but if you look between wave 3 and 4, you can kind of see A, B, C, so that is a zigzag. Now wave 2 could technically be a little longer, could even go as far as here, and yeah, like here-ish. Now then at some point it might complain that wave 3 is the shortest wave, okay, so yeah, like there we will have to play around a little bit to figure this out, so this way it would work out. Then here, that last part, we could technically say 1, 2 or 1, 2 3, 4, 5, so that this here is an impulse, that here is a zigzag. Now the question is wave 3 here could be, but then it would be the shortest wave if it would be 1, 2, 3, 4, 5, yeah. More likely it could be either 1, 2, and then this here is wave 3, which would then need to subdivide in an impulse, which could be, what's the high here, 150, 50, and what are the lows here? Okay, they go a little bit lower, so that cannot be 1, 2. Here it would make it the shortest wave. It's tricky to confirm fully, yeah, but so that one here, can we zoom out a little bit more? Yeah, so let's try this again. So from here to here, we would need another impulse or leading diagonal now. And here as well, we also can roughly see A, B, C. So I think only that third wave here will be challenging to confirm. Oh no, like it complains here about wave 3 must decompose into an impulse. Yeah, and here it's labeled as a leading diagonal. So the wave 3 here will be the tricky part. But we can see that if we split that up into 1, 2, 3, 4, 5, so far we are able to confirm wave 1 with another impulse, wave 2 with a zigzag, wave 4 with a zigzag, and wave 5 with an impulse. Now, technically, rule of alternation, if this here is a zigzag, which it most definitely is, then wave 2 should be a more complex correction, which means wave 2 likely didn't end here, but may just end here. And then that's a zigzag, followed by another zigzag that we can also easily spot with the naked eye. So like ABC, ABC, and then this here is some other corrective pattern, so that it makes it a double zigzag or a triple zigzag, double zigzag, or oops, wrong, yeah, a double free corrective pattern. So we see ABC, so that's basically a double zigzag, double zigzag, or a double free with 2 zigzags. So depending on how you look at it, yeah. And then our wave 3 also, yeah, like still doesn't check out. It's going to be the tricky part here. Problem is, if we make our wave 2 here, then the problem is that wave 3 is the shortest wave in our labeling here. However, we get another alternative here, so might not work out. But if we say this is wave 1. This here is wave 2 with, I don't know how we label it, corrective pattern, 3, 4, 5, yeah, so this way it would work out. Now if we look close here, we could have a 1, 2, 3, 4, 5, or 1, 2, 3, 4, 5, so I'm sure that we can label an impulse in here, yeah, and then it's going to be more tricky or trickier to label a zigzag or something like a zigzag in here, but that could just be our problem in terms of that it could be a problem in terms of we're looking so close, we don't have any time frame below 1 minute, so that's why we cannot figure it out. But if we look very like rough or very roughly, we can see if this would be wave A, then that would be wave B, and then followed by wave C. It would actually make up a zigzag, so like hard to spot, but A, B, C. And now this way, zooming out again, this way we should also have no problem labeling this as an impulse. It's not nicely done here with 1, 2, 3, 4, which would indicate that this here is some kind of flat correction. I probably would just go like this, 1, 2, 3, 4, 5, and yeah, and then the question would be, how would we label this part here? So from here to here, yeah, it would go like this, but that could then also be A, B, C. Yeah, like so that part here would then be the one that I'm not 100% sure about. But so basically there are multiple ways how we can label this as an impulse. And likely there are also other variations of an impulse, so like moving the blue points 1, 2, 3, 4, 5, that still would check out, which confirms that it's wave A of the zigzag. So And now we're... Other than that, I mean, if this would be 1, 2, 3, 4, that could also be the case. If we would have kind of like, let's say 1, 2, somehow like this, maybe it ended a little earlier, then this would be wave 3, and wave 4 retraces slightly into the base channel. And we're going to switch back to 5 minutes so we can actually work a little bit. And then that would be our point 4. But then we would get a price target for our wave 5, either where we currently are at the median here, or at the top of the channel. Yeah, which would in our primary analysis not fit, because we're expecting a zigzag here. And it kind of, or it would just make our charting harder, because if we go up till here, we would be tempted to say maybe this is already point D, when it's likely only wave 1 of the impulse and wave 1 of the zigzag, or wave A of the zigzag. And then we would expect the wave B drop all the way down and so on. So it's kind of like, yeah. I think a few more candles, like a little bit time that passes, will help us and do wonders here to figure out, like, so far we still, if this is wave A, then this could still be 1, 2 of the impulse that is wave A of the smaller zigzag that will fit between this point A and the point B down there. And yeah, like so, if we would go much higher here, then at some point we would have to reconsider, of course, especially if we go higher than 169.95. And yeah, if we go lower, it likely helps us confirm this. So yeah, so that's where we stand here right now. And yeah, if we go higher, we would likely look at our alternative wave count. But again, it's by far not as accurate in terms of Fibonacci relationships and following the rules when it comes to how a triangle plays out. I mean, the only thing perfect here is the nice zigzag that we have here, but that's also a zigzag, so like that makes up wave A in this alternative count. But other than that, like there's no symmetry to things. Like this wave here is like 3 days, yeah, and yeah, it's also 3 days, okay. But then our wave B here basically is less than 1 day, and our wave C would still hold up, and our wave D also roughly holds up. So yeah, so pretty much wave B is the one that's super short in time, whereas with our primary count, maybe daily or hourly is enough. Yeah, with our primary count, pretty much everything works out nicely. So I really think that this is the more likely scenario that will play out, but yeah, as often, it's kind of like, it's already become a kind of a habit when I say, okay, now this is the final labeling, and everything like the rules check out and this and that, and then we wait a little bit and then the chart says no, then we have some movement that invalidates whatever I'm labeling. But there again, like there is the reminder, if you read the Elliott Wave Principle book, it will point out to you that corrective patterns are like a pain in the ass to label, and that sometimes you just might not be able to label them properly until they are finished. Yeah, and yeah, we're gonna have more fun and more success in quotes once we definitely have confirmation, either once we finish a pattern like this and break out into the next impulse and the fifth wave here, or if it was already here with like our alternative count, then if we have a clear movement that takes us out of the triangle to make it clear that this is actually the accurate labeling. Because then we can focus on labeling the 1, 2, 3, 4, 5 impulse wave up there, which is going to be more fun, with the exceptions of wave 2 and 4, of course. Yeah, but for that, as so often, we'll just have to wait and see a few more candles. Dip, dip, dip. Yeah. I'm actually curious, like who of you or who among you already read the book about Elliott wave principles? So who of you actually jumped into it and decided, okay, you're gonna give it a try, and so you're gonna give it a try and you're gonna try to label for yourself. As long as it doesn't go left, well, it's kind of like tricky. I think there's like, yeah, like left would be kind of, I mean, impossible, yeah, since new candles on the right. Maybe I'm not understanding the joke here, but yeah. Another thing, yeah, like since we totally missed that today, like we had a gap obviously in the morning, and as we know by experience already, that very often but not always gaps get closed, so we shouldn't have been surprised that the movement up here actually reached that area, because very often gaps get closed. So I don't know how I missed that. Maybe I, yeah, whatever, maybe not enough Red Bull today or something like that. And yeah, there I like the scene from Wolf and Wall Street where he sits with, what's the guy's name, Mark Hanna or so, and the other guy is like, nobody knows what stock prices, where the stock prices go, if they go up, down, sideways, or in fucking circles, yeah. Although like in the movie, that guy like made $1 million in that year in commission and so on, and he's like, okay, you just sell them the next idea and the next stock to reinvest, and you take the commission home, yeah. I think that's also like thinking short term in terms of taking home money right now and maybe spending it on your new mansion or whatever, instead of thinking about how you can put it to work long term.
No, he bought a bracelet to his wife.
No, not Jordan Belfort, like okay. The other guy that the...
Yeah, Matthew McConaughey.
Yeah, Matthew McConaughey, yeah. It's like Wolf of Wall Street is actually one of my favorite movies. I like it a lot, but then I'm also surprised, you know, like because I don't know how many of you know it. You see that at the end of the movie where Jordan Belfort is actually giving seminars for like teaching sales techniques and so on, and I don't know who books that guy. Like, who is willing to pay money to learn from him? I mean, sure, first of all, back in the day, he was a great sales guy. But the bigger point is, like, that guy has no moral compass whatsoever. Like, he literally knowingly screwed over people to line his own pockets and couldn't get enough, yeah? And then I'm actually surprised that there's, like, even now, there are enough people that are, like, worship him, in quotes, like, yeah. I like the movie, but yeah, like I don't like the person in terms of, I don't know, like if all you care about is to make more money and you don't care how you make it and who you screw over along the way, then you're a despicable person, in my opinion, yeah. And I wouldn't mind, you know, like then people might say, well, he went to jail and he served his time and so on, but he still has to pay 100 million in restitution. And as far as I know, I might be like not 100% up to date on that information, but as far as I know, he incorporated in Australia and is basically an employee of the Australian company, and all his speaking revenue and so goes to the Australian company, so that the like the government or the debt collectors or whoever in the US cannot touch it. Yeah, so basically he paid back, I think, like 10 million of the more than 100 million that he is supposed to pay back to the people that he scammed. And yeah, I think that's just despicable. Of course, like doing something so that you can like recover yourself, but really doing so like not making it easy for others to take away the money that you earned after you get out of jail and so on. Definitely, I'm for that. But then again, earning millions in like coaching revenue and not even considering to, okay, now I'm gonna make the people that I screwed over whole, just like despicable. Yeah. But yeah, still love the movie. Yeah. Good morning, Emission Nocturnal. Emission. Yeah, Nocturnal. Great to have you here. So we are again watching candles move sideways. The question is if we can find a pattern, if like GameStop moves sideways when I stream and goes up when I'm not. Yeah, kind of like, I think it's like tricky. If we look on the 5-minute time frame, obviously we get a few candles, one every 5 minutes, surprise, surprise. And we see some movement, but it's also harder to understand what we are looking at right now in terms of what's the bigger picture. Yeah. So, and if I zoom out, it just gets distorted really, really fast, and I cannot even zoom out properly. That's we're anywhere in our alternative count here. So, if we primary and here 5 minute, it just becomes harder to see what we are actually looking at. Yeah, but yeah. Just so for everyone that just jumps in here and is wondering, we're actually expecting is that this kind of like is, yeah, like this, something like that. 1, 2, 3, 4, 5, or it could be, I think it's more likely like this, so that we have a noticeable movement and actually get somewhere. Maybe not as deep as that, but yeah, we'll see how. Basically, we'll see if we go below 160, it helps us to confirm this theory, and if we go above 165, or basically the latest at 169, we'll know that maybe Predator was right, so that it still could be part of wave A, so that this is kind of like maybe wave 3, 4, 5 of the impulse that makes up wave A, or our alternative count is valid, and so on. So as you see, there's a lot of flexibility to Elliott wave theory, and it's kind of like then the probably science or art or the practice over time, the more you label and the more experience you have, like the more likely you will get the right pattern or pick the right count for your decisions. But the benefit still from Elliott or by Elliott wave theory is like, even if you end up being right only 50% of the time, if we zoom out a little bit. So even if you end up being right 50% of the time only, your winning rates will still be, your winning trades will still be much better than your losing trades. So, and sometimes even when you're wrong, it will still work in your favor. So initially, for example, we thought this is our wave 3, and our wave 4 ends here. So we would have bought here, and we would have already in advance expected the correction to go roughly till here. So we would have maybe bought at, I don't know, 130, yeah, and then that position, our stop loss would then later be added once we have that low. Stop loss would then be added at 116.90, for example. And so while we would have that upright and would be okay, it was wave 4, and now we have 1, 2, 3, 4, 5. Even when that then turns into more sideways movement, we still would have the position open and we would still have a profitable position. But even in the cases where so sometimes you would label it wrong, but it would still turn out to be okay. It would just mean that you don't have instant profit. You have to wait out the rest of the correction before you then have your profitable move. And in other cases, if you were to trade based on an impulse wave, so for example, in a reverse scenario on a small scale, if we were to say, like here, if we were to say, okay, this is wave 1, 2, because of the retracement here being perfectly on 61.8%, now we would short here with our profit target that we can then calculate in some way, doesn't really matter, but our stop loss would be at 165. Because if we go higher here, it means it invalidates 0.2, which happened here. So our loss would be very small if we would have said we shorted roughly here, for example, yeah, or maybe even we shorted after that candle here. So we would short at 162 something with a profit target below 156. So that would definitely, for a third wave, we need to go below 0.1. Yeah. So, however, our stop loss would be only like $2 away. So we would have, if we here at 162, so we would have likely a 4-to-1 ratio in terms of profit versus loss. So even if we're only right every fifth time, it would be break even or slightly profitable. And yeah, now that movement here either forces us to move this 2 or will force us to yeah, like accept that wave A hasn't finished, or will force us to use our alternative count. Yeah, we'll have to see. I'm gonna move that, or yeah, like I'm gonna move that somewhere here for now, so until we see how it plays out. So while Elliott wave theory is, yeah, always offers you a couple of possibilities, so a couple of labelings that might be accurate, and only one of them then turns out to be true. Even if you pick the wrong one, you still have like a bigger upside than your risk with pretty much all of your trades, and therefore even if you're wrong or even if you're right only half of the time, it still should turn out to be a super profitable strategy for you. But it takes a lot of time to, while it sounds very simple, okay, you have like upwards movements 1, 2, 3, 4, 5, where wave 2 and 4 are counter trend movements, and so, or you have impulse movements that go in the trend direction 1, 2, 3, 4, 5, with wave 2 and 4 being counter trend movements, blah blah blah. So basically trend movements always split up into 5 waves, where counter trend moves always split up into 3 waves, and so on, yeah. And sounds very simple, but then when you look at the rules and especially the flexibility that you have when it comes to, yes, an impulse wave, wave 4 should never go into the area of wave 1, but then you have leading and ending diagonals where that is explicitly the case as, so yeah, like so. The flexibility is what makes sure that Elliott wave principle can be applied pretty much everywhere, but it also is the one thing that causes us headaches and makes or invalidates our labeling from time to time, yeah. But yeah, so I'm gonna take a short break, and then we're gonna get back at this and see what happened, if something got invalidated or if it moved the way I thought it would. And once we then have whatever change I think we need to make labeled, we're gonna jump and take a look at a few other stocks during the stream. So, and maybe a little bit also on cryptocurrency, although I'm still not sure there about my data sources. So yeah, I'm gonna be back in around 5 minutes or maybe 10. So enjoy the sideways movements and potentially the drop that I'm expecting and am rooting for to confirm the triangle pattern. So till then, be right back. back again, and yeah, nothing happened during those few minutes. God, patience is a virtue. Yeah, since there's not much going on with GameStop, yeah, like I want to discuss something else. Like maybe I don't know how many of you are just binge watching, how many of you are active paying attention, and so on. But Irina and I, we are living in an apartment building which is quite nice in quotes, yeah. And next to us are like older buildings, so older. I don't know how you say that. Like, yeah, like they are probably from 1980 something or so. And a couple days ago, a homeless person pretty much moved in under the balcony of one of the ground floor apartments. And Irina is very passionate, or not passionate, very compassionate. So when she sees either animals suffering or people suffering, it gets to her a lot. And we were discussing, like, if there is something we could do. And my point of view is that it's like your number one priority should be to make sure that you are doing fine. Not from a selfish perspective that you always just care about yourself, yeah, but only when you are doing fine in terms like you're healthy, you have financial security and so on, only then are you able to help others. When you're not at the point, so if you're not at the point where you are doing fine, but you're constantly, I don't know, donating parts of your money to some charities and this and on, or this and that and so on, then you might make a small difference, in my opinion, but you might not, or you're not making the difference that you could make if you first take care of your own financial freedom. And yeah, you can just move more. Yeah, obviously, if you have more money, you can obviously move more. Yeah. And in terms of, for example, if you have, I don't know, if you have $1,000 per month in revenue or in salary or income or whatever, and every month you donate $50, then those $50 will be spent by whichever organization you give it to. Now, maybe you pick a good charity that actually uses most of the money to do good, or you pick a bad one where most of your money actually is paid for salaries and other stuff. But the bigger point being is like some of your money makes a difference. However, if you, on the other hand, or let's say you have a $1,000 salary and you donate 10% of it, so $100 per month donation. Doesn't matter if it's for some animal shelter, save the ocean, planting trees, or for all I care, to your political party. Yeah? So you give them $100, they do something with that money and you make a small difference. Yeah. However, if you take that $100 on the other hand and you save it, so you invest it for the next 10 or 15 years, whatnot, yeah. So you get interest on it and it grows and maybe you make the right investment decisions. Maybe you bought GameStop and you are believing into a short squeeze that will make you rich. And then suddenly you don't have like $100 per month, but suddenly you have like, I don't know, like 10,000, 20,000, 100,000, $1 million. And obviously with that, if you would want to spend all of it, or if you just take the yearly interest and then donate it, I think you would make a bigger difference. Yeah. And so my stance there is kind of like to go the way to make sure that we achieve the financial freedom where we don't have to worry at all anymore, but where we then also can make a bigger difference. And I'm curious, like, how do you guys think? Like, how does it affect you when you walk through the city or so and you see, I don't know, like a elderly homeless person or so? Are you super inclined to take out your wallet and give them some money? Does it not affect you at all, or are you then more about also thinking, okay, once I really succeeded, I will, I don't know, build a big homeless shelter or build homes for homeless people or something like that. So, or my wife says, or for kitties. So she likes cats a lot. Yeah, but yeah. So curious how you would handle it personally. Yeah, like I'm not sure if I mentioned it in our previous streams, but for example, for the employees that we started hiring and so on, we also have a bonus system set up. So 10% of our profit that we make every month before taxes is basically used to pay a bonus depending on how long employees have been with us. And I this week actually decided that we're going to do the same and take parts of that bonus money. I know it's like taking it away from the employees, but yeah, like 99% of companies anyway don't pay those bonuses. So, but to take parts of that money and basically donate it to a few organizations, so for to help with different issues. Because, for example, another thing that I think there's been there's been a lot of projects about planting trees, yeah, and while I think it's an important aspect to help with reforestation, so yeah, plant the trees that others burnt down or used for whatever furniture or whatever they needed it for. I think it's only parts of the, or only solves parts of the issue. And that's why for us, for example, I mean, as I said, my wife cares a lot about animals, so parts of our donations go to an animal shelter here in Kiev. And I decided that basically, I mean, she's currently looking for homeless shelters here in Kiev that we could support now that we had the situation, or have the situation, that there's a homeless person that literally lives below the balcony of our neighboring house. And I also thought about what else there would be, and yeah, like picked a charity that would plant trees, because I think it's an important aspect. But I think another very overlooked aspect is cleaning up our oceans, because they're like literally areas full of plastic swimming in the ocean that you can probably see from space or so. Yeah, like I'm actually gonna look if okay, don't find pictures for that, but let's say plastic islands in the ocean. Yeah, so not sure if all of you are aware, but that's pretty much how parts of the ocean look like. I mean, that's beach, of course, yeah, and yeah, so I think that's also an important aspect if we consider how much of yeah, like our food and so on comes from the ocean, how many different kind of or types of animals live in the ocean. And so that's what we are doing right now, to say, okay, on one hand, I want to have that, I want to first reach that financial freedom that I don't have to give a shit anymore at all, and then do something bigger, like mentioned, build a homeless shelter or whatever, like build a school in Africa or whatever it is that you want to affect, yeah. For me, those are a few things. But on the other hand, I understand, and Predator says that I agree with you, but the world needs people who donate despite not being rich, yeah. And that's why my approach is to simply consider, like we keep track of the bonus payments for our employees, and where pretty much the only thing that affects the size of their bonus is how long they've been working with us. So the longer somebody stays with us, the bigger share of the bonus they get. And we just consider like a virtual employee called donations, and that also gets a share, and that we then split up among different purposes to make a small difference already right now. Yeah, but yeah, you know, one problem that I have with donations is when I was younger, maybe like 12 years ago or so, a friend of mine, there used to be he used to work for a company that would collect donations. So, and the way it worked would be they would drive to some area in our state and then spend like 4 to 8 hours just going door to door, and whoever opened the door, similar to like Jehovah's Witnesses, like instead of "can I speak with you about God and the world" or something like that, it was, for example, for a charity, or not for a charity, but for a foundation that trains rescue dogs, like for, you know, that find people when they are, I don't know, buried somewhere and stuff like that. And which obviously is a nice idea, but from the donation, so if somebody would say, yes, I want to donate €100, actually, I don't remember it 100% accurate, it was either 70% or 90% got paid to the guy that was knocking at the door. So, and he was just a foot soldier. There was like a regional manager that got a share, and then there was like the company itself that got a share of that first year's donation. And they basically sold the donations as subscriptions, so like where it would then in a year from now charge you again, and in the second year the foot soldier would still get 50% of the donation, yeah. And That's why I'm with charities, I'm a little bit, like very, very picky. Be back in a second. Back again. So that's why I have like a hard time with most charities. It's also, especially when you deal with international charities, it's like a lot of corruption going on. So if you have a charity, for example, that collects money, let's say in the US, to help children in Africa, there the problem is that it's very hard or next to impossible to audit those charities properly, because as long as they can prove that the funds moved from the US, from their US accounts to the companies that are then responsible for, I don't know, building the wells or the schools or whatever they're building, they did their part. But the company in Africa, if they actually needed, so like let's say the charity sends them a $100,000 donation, and then so the charity sends a $100,000 donation, but they build a school that only costs $10,000. So what then that construction company does, how they distribute that money, it's not really the charity's problem anymore. They still will have pictures where they can prove that they build a school and so on. Maybe some of that money even is then a kickback. So like somebody from the charity then gets a kickback from the construction company for giving them the contract and so on. So I have a big problem with charities in most cases. Now, Robert, great to have you here. I give to church and several select charities I trust and believe in. Sometimes I give money, food to people on the street. I don't worry about how they will use it. I can't give them a worthiness test. I have to have faith that it will help them in the right way. Yeah. It's great that you do something. Let's start with that. So it's really great that you do something and that you give from what you have, since you are apparently doing well enough to be able to give a little bit. Personally, I would never donate to a church, doesn't matter which one it is. Mostly because during my time, for example, in the Philippines, I've seen the slums there. I've seen the regular like guarded compounds with like small cheap houses where the average population lives. And I've seen the expensive churches built next to those compounds that burn or that cost a fortune. And instead of using that money to actually help the population, there's an entire Instagram account that shows you the wealth of the church, where you see that kind of like look at pictures from priests and bishops and so on, and then point out that bishop is wearing $2,000 shoes, for example. Yeah. So I think like when it comes to religion, that's the last thing I would donate to, especially, and that's like it might be different depending on where you live on, but I grew up in Austria, and in Austria and Germany, if you are baptized, so you're a member of the church then by definition, as soon as you turn 18 and when you have a salary, you are legally forced to pay a church tax. So they already take part of your salary, and there's a difference. And that's really the crazy part about it. For example, if you, so we have a business. If I sell you something and you don't pay, there are some steps I could go to get then the debt collectors involved to get the money from you. However, for the church, there are different rules apply, and they have way more ways to force you to pay that tax. And I don't like that. And I'm really like, if I combine that people in Austria and Germany, unless they officially leave the church, are forced to pay a part of their salary to the church. On top of that, whenever you go to church, they still hand the basket around and where you still should throw money in. And if you don't do it, people look at you weird. Yeah. So, and when I combine that with seeing what the church does with the money, especially in poor third world countries, then it's definitely the last organization that I personally would give money to. Yeah, that doesn't mean that I don't believe in some kind of higher being or so. But yeah, for me, in my personal opinion, I respect if somebody disagrees with that. but in my personal opinion, the church, and it's no matter which church you pick on this planet, is nothing else but a company with the purpose of gaining and collecting money and building up influence. Yeah, and so yeah, that's something I wouldn't support. Now, to the other aspect, like when I see people on the street, I don't worry about how they will use it. I can't give them worthiness test and so on, and then you give them some food or some money. Yeah, there I do the same, but with certain limitations, you know, because it depends where I am. So here in Ukraine, it's a different situation, for example, than if I'm in Germany or Austria, for example, because in Germany or Austria, if you're not an illegal immigrant, so if you're actually living there and at some point maybe you had a job or so, the social system there is created in a way that I don't know of any way how you could actually be homeless. Yeah, so there is like, if you don't have a job, you get unemployment payments. If you don't have that, or if that is expired, you get social security payments. If those social security payments are not enough to pay your rent, the government pays the rent for you, not for a huge apartment. So if you were to be single and you live in a 3-bedroom apartment, you would be forced to move out, and they would provide you with a smaller apartment that has a certain amount of square meters for you. If your fridge breaks, you can apply, and the government will provide you with a new fridge. So all the necessities that you need to have to survive, not to enjoy life, but to survive. Yeah, and so while you wouldn't have a great life, there is like no case that I know, if you're not an illegal immigrant, where you would be homeless and would have to beg on the street. So that's where in Austria and Germany, it's actually a problem there. There are literally organizations that drive people from neighboring Eastern European countries, for example, by bus into bigger cities in Germany, Austria, and France, and have them back there. And those people at the end of the day have to hand over all the money that they begged. Yeah? In France, there used to be a case where a woman was begging with a baby in her arm, and it turned out that the baby was dead. So as far as I know, they made a new law or regulation that you're not allowed to beg with children anymore, and so on. Yeah, and so it's kind of like, yeah, so there, it really depends on the country. Here in Ukraine, I also draw the line based on the age. Yeah, so I know that the social security system here is not great, but I also know that if you want to have a job, you can always get one here. So it's not that there is no work. If you are on the street and you are, let's say, below 40 years or so, then it's likely because you are not willing to put in the effort, or you were too picky to take a certain job, or you were living above your means. So maybe your job paid you $200 per month, but your apartment cost you $300 per month. So here it's basically, I feel pity, and I'm like more likely to give somebody usually some money, because it's what I usually carry around. If it's like elder people, because I know that, for example, 2 acquaintances of Irina and me, so closer acquaintances, their pension is $50 per month. Yeah, so, and she has diabetes, and basically the medication would already cost more than that. Yeah, so I know that here, when it's older people, where it's clear that they definitely are not able to work anymore, or likely are not able to work anymore, and so on, then I combined it with that the social system here is not as great as it is, for example, in Austria or Germany, and then I have no problem, and I think it's then the right thing to do to just give a little bit of the wealth that we have based on what we've built. But there are also cases where I don't see a reason to, like, like I see people, or when I talk to people, it's like sometimes it's there, for you it's so easy. So like that they may see what we have now in quotes, so our cash flow, or how our business is growing and so on, and then say for us it's easy. But then I'm like, they all forget that for the last 2 years, my wife and I, we've been working pretty much 7 days per week. Now, not every day was like an 8-hour day or so. So we also have days where we do less. And in between, we had an exaggerating 2 weeks vacation in quotes, where we made trips to Austria to visit family, but mostly because I also had other things to do there, like apply for a new visa and stuff like that. But, like, so I see enough people that would then kind of like that are not willing to put in the effort, that are struggling financially. I have one acquaintance of mine, I mentioned it before already, he's also struggling financially. He's a single dad, his little boy is with his parents the entire week and he only sees him on the weekend. And yeah, he still has some debt and so on. And he literally has kind of like a shortcut to me. So like he's one of the people that when he texts, I'm there. And over the last 2 years where Irina and I tried countless things, so we really tried a lot of things ranging from affiliate marketing to YouTube to blogging to a lot of other stuff until we figured what works for us and what we enjoy doing. And I constantly kept him updated and pointed out the things that he could also easily do. But for the last 2 years, he's constantly, for no matter what I shared with him as a potential way for him to make some money on the side and improve his situation and maybe reach the point where he can see his son 7 days per week. He constantly, it's constantly the same thing. Like, yeah, for you it's so easy, and yeah, and other excuses. I don't have time. I don't have this. I don't have that. Yeah, and so my pitying quotes or my compassion for people that are still younger and physically capable and at least have a mobile phone, yeah, like there it's almost non-existent. I'm sure there are a few exceptions that don't deserve my judgment, that really it was not their fault, that they maybe ended up on the street or that they're not financially at least okay. But yeah, in most instances it simply comes down to people not willing to make some sacrifices. Yeah, and I'm not speaking here from a high horse. I used to be the same moron in terms of I leased a car that at one point I could afford, and when it was clear I couldn't afford it anymore, instead of simply trying to get rid of it, buying a cheaper car, I tried with all my might to maintain the payments for the car, because what would people think if I would have to give it back and suddenly, instead of driving a new car, driving some old used car and so on, yeah? Which obviously was a dumb decision and so on. And yeah, yeah, I mean, you know, Robert, when it comes to religion, just to finish this off, this religion topic, yeah, I think, so while I said I think every church is more like a business and so on, I'm sure that there are like some, if you look closer, if you don't look at the entire church, but if you look at some local pastor and his church and his community, that there's a certain percentage that really does the job because they want to help people and be there for people, yeah. And so there's definitely some good that comes for it. But with my experience overall, it's like if I would have to give it one classification, I would say pick any church or any religion, and I'm gonna show you how it's just a business about money and power, yeah. But again, in the smaller, if you look closer, then I'm sure within every religion and every church, there are certain communities where the pastor, or however it's called then in that religion, actually does it because he wants to help people and because he cares about them, yeah, and not because of the money aspect. So, but it's like, yeah, like when it comes to religion, it's also one of the points that I think from most people. If you think about what's the 10 Amendments, yeah, I think it's called amendments, then that's something, for example, that literally would be common sense. Yeah. So I think instead of religion, I mean, I get that religion is needed for people in terms that they know what comes after death, or that they think they know what comes after death, because people don't like uncertainties or not knowing. Yeah. But it also causes harm when you have people that every time when something good happens, they say thank God, and every time something bad happens, instead of trying to figure out why and what they can do against it, they classify it as it's a test from God, yeah, to test your faith or whatever, yeah. And it kind of like religion is I'm not saying in every case, yeah, but in some cases or for some people, is then used as an excuse to avoid, or so that they don't have to take responsibilities for their own action and consequences. And in terms of things like the 10 Amendments, I think like we wouldn't necessarily need any religions at all. Maybe something, you know, for people to think and or to to know, in quotes, what happens once we die, so that there is some kind of like less fear and uncertainty, because you have the expectations that you go to paradise or that you're reborn or whatever. But besides that, if we would all just follow one simple rule, and that is treat everyone the way you want to be treated, you wouldn't need laws, you wouldn't need charities, you wouldn't need 10 amendments, you wouldn't need any of that, because everything would just work out quite fine, you know, like, because then you wouldn't have, you wouldn't even need courts or police or anything like that, because if everyone would just treat every other person the exact same way they want to be treated, nobody would run around and shoot people, nobody would run around and rape women, and nobody would, I don't know, like start a war or scam people and so on. There would be no Ponzi schemes, there would be no pump and dumps and stock market manipulation. The whole GameStop situation wouldn't exist if people would just follow that one rule, treat everyone the same way you would want to be treated. Yeah, and yeah, but so, and that's basically what I try to do most of the time. It's not always possible and not always easy, because I'm also human, which means I suffer from emotion. So sometimes I also might get angry or something, and then reason might fly out the window. But yeah, it's like kind of like my one amendment that I'm following as close as possible. And yeah, then, and I like, it might be easy to say, but I really do this like or I try to do this in every aspect of life. For example, so even when it's about financial things, for example, there's a project called Geocache that grants you geo tokens for just sharing your location data in some ways. So the more you move around, the more geo you earn, blah, blah, blah. And they used to have a referral program where when you bring them people, for each person that gets verified, so shares some verifiable data, you receive 1 geo, which at some point was worth $1.40. Yeah. And then somehow, or at some point during their test phase, they're still in the test phase, now close to the mainnet, they decided to stop the referral program. So, and since you got the referral commissions or earnings paid delayed, they basically with that change screwed me out of like almost $7,000. Yeah, so, which obviously made me a little upset. I mean, it's not that it's like the $7,000 would change our life, it's just simply, yeah, not the nice thing to do, which I pointed out on their Discord and so on. And eventually they messaged me personally and said, because I'm an influencer with my main YouTube channel and whatnot, they will make me whole. Yeah. And obviously, if I'm a selfish prick, I would just say, yeah, great, give me my whatever, close to $7,000 worth of geo, and I will continue to make positive content about your project and so on. But that would not be the right thing to do. Yeah. And so, well, that wasn't even a hard decision, to be honest, but my response simply was like, no, either you make everyone whole, so you honor your original pledge, in quotes, that referrals will receive that 1 geo reward, or you don't. Yeah, like, and yeah, like I think if everyone would follow those, so like just from time to time, not think of their own benefit and own pocket, but think about, is it the right thing to do? How would it affect others? The world would be a better place. If you treat everyone the way you want to be treated, we really wouldn't, there would be no, I mean, there might still be some plastic swimming in the ocean and some pollution because, I don't know, like years ago, companies, or decades ago, companies didn't know better or something like that. But then there wouldn't be cases where, when you look at the, for example, fossil fuel industry, where apparently their own internal studies already told them 40 years ago or 30 years ago that they are a huge factor to global warming, and they still just try to bury the results, in quotes, to keep their profitable industry going, instead of trying to, I don't know, dump billions of dollars into research to see how they can transition into a renewable energy business that doesn't damage our planet and so on. Yeah. So, but yeah. So, but I said, like, I accept every, or I respect every alternative opinion. If somebody is super religious and thinks his religion is the only one true religion, that's his prerogative, and I'm not going to be like, how can you be like this or whatever, like, so I can respect that. So like, but, and just like I don't try to force my non-belief, in quotes, on other people, as long as people don't try to force their beliefs on me or on other people, I am perfectly fine if somebody has a different opinion, a different religion, different political affiliation and so on. Yeah. Yeah, but yeah, but we got quite a little bit off topic here. So as I said, like in terms of donations, my real question would be about the case that I mentioned, so that we have that one homeless person that if I was to stand up and walk over to the window, I could look down and see him sleeping under the balcony of one of the neighboring apartments, yeah? And I'm honestly, like, on one hand, for example, if I go down there or if Irina goes down there and gives him some food, yeah, then it would kind of set the example, maybe I have to like start with a different topic here. Like one lesson that I learned the hard way is you never help anybody by giving them money. And that's like in quotes, yeah. So there's like, of course, exceptions like to every rule. But when I was younger and I was struggling, for example, with the car payments that I mentioned earlier, then I tried to get things together. Like I tried to make more money, I tried to figure things out and so on. But I also knew back then that if I really, really cannot make this month's payment, that my grandmom will always save my ass and will give me the whatever missing $100, $200, even $500 to pay for it, yeah? And as a result, because I knew that, like, well, back then I didn't understand that, and I also didn't admit it to myself. Wait, 166.27, 166.32. But because I knew that, I didn't do everything that I could. So I kind of like my efforts were a little bit superficial because I knew, well, if I don't manage to somehow get that money by next week, I can just visit my grandma and tell her me, blah, 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 and she will save my ass. Until the point where she at one point told me, okay, this is the last time. Like in the future, there is no more money for me. Yeah? And that was the point where I was forced to figure things out. So, and it's like the same thing with some of my still acquaintances and friends and some of the people that are former acquaintances or friends. As long as they knew that I would, if they text me like, oh, me, blah, 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 I need $200 and I will give it to them, yeah, they never had a reason to change anything. And because they knew if it's really something important, if Christian has the money, he will give it, he will help me. Yeah? And that's why I think in most cases, you don't help anybody by giving them money. It's better to let them fail or let them suffer the consequences so they are forced to learn the lesson. Yeah? And I have a couple of examples where that worked out very well. So where people maybe hit the rock bottom financially, in quotes, but then learned their lesson and got their shit together and are really doing well right now. And yeah, so in regards to the homeless person in our neighboring, or at our neighboring building, my opinion, or not my opinion, but my thought process is, okay, if we go down there and give him food, for example, yeah, it would definitely be a nice gesture and a nice thing to do. But what does it really change? It takes time out of our day, and time is really the one thing that Irina and I don't have a lot of at the moment. And on top of that, so it takes time out of our day, and on top of that, it takes a little money out of our pockets, might not be much, but still might sum up. But it also teaches him, oh great, not only has he found a place where he can sleep and nobody tries to shoo him away, but also, oh, there are people that care and bring me food and this and that, yeah? So it's kind of like I don't know, like how to say that in English, like a tough situation to figure out what's the right thing to do. We're definitely in a situation to help, but we also cannot go out of our way to help one single person because we still are not where we want to be. And yeah, so how would you guys handle that? Like maybe you live in a house, maybe you live in an apartment building, but let's assume you live in an apartment building and you notice when you look out the window that on the next apartment building below the ground floor apartment's balcony, some guy moved in with a blanket and a pillow and yeah, like sleeps there. So what would you guys do? Would you like shoo him away because it drives down the property value in your neighborhood, or would you bring him food, or would you go as far as to invite them into your apartment, which I personally wouldn't do because I don't know the person, and I definitely wouldn't sleep well having a stranger in my apartment where I don't know how desperate that person is. For that I enjoy my life too much. But yeah, like what would you guys do? So personally, that's what Irina is doing right now. She's looking for homeless shelters in Kiev, and as said, we're gonna donate some money monthly, depending on how good our months are going, and to, instead of trying to help one person by maybe giving him, I don't know, like a little food every day or every second day or every third day, to actually help more people at once. And yeah, which is also interesting because Irina found a few articles, although outdated ones, and she's still checking, that there are apparently some homeless shelters where where homeless people can stay the night, and where it's like 20 hryvnia, so it's like less than $1 for them to basically sleep there for the night and also get something to eat. Yeah, and then, I mean, again, she's still looking because the articles and websites are outdated and trying to confirm that. But if that's still accurate or so, then I would, for example, I don't know, like go down to that guy and pretty much tell him where that homeless shelter is, and maybe not give him directly the money, but maybe figure out a way how I can pay at the homeless shelter for him for, I don't know, a month to sleep there or so, yeah. Predator says, I'm not in a position to be helping others, but I wouldn't shoo him away. I also wouldn't shoo him away, definitely not. But I'm actually, honestly, I'm wondering, considering the people in our building, that, yeah, like that it's a matter of time until somebody is like, oh my God, let's shoo him away. Yeah? Michael says, we'll never give money, but we'll always give food and rides if someone needs. Usually we encourage them to utilize the free food and programs in the area and let them know about what is available. I think that's the right thing to do. Like, I mean, Irina and I are, as said, or she is looking into it because obviously there is almost no English content and my Russian is non-existent, or my Ukrainian. So, but yeah, I also used to, when I was younger, I remember once I was, so I grew up at a town like maybe 30 minutes away from the Italian border. And back then I was also smoking, and cigarettes at the border were cheaper than they were in the country. So once a month or every 2 months I would drive to the border to buy like a couple packs of cigarettes. And I know one time in summer I was driving there, and back then I was also doing financially well, so it was not a big issue. And on the way there I noticed that there was a guy just walking alongside the street in the direction of the city that I came from, but I was driving the other way, so and on my way back that guy was still walking, and he made a little bit progress but not a lot. And so I stopped and asked him where he's going, and he wanted to go toward that direction. And yeah, so I offered him to get in the car, and he got in. Like, obviously he smelled bad and yeah, whatever, but I noticed that he didn't wear shoes, and apparently he's been walking from Italy or Slovenia, so across the border and whatnot, and was trying to, don't remember it perfectly, but maybe either he was trying to get back home, in quotes, to Germany or some other parts of Austria. But yeah, like he was really in a bad position. So yeah, like I noticed that he has roughly the same shoe size that I have and so on. And since he mentioned he would like to basically get to the next highway or autobahn so that he can stop for the rest of, or like hitchhike for the rest of the way. So I decided if he minds if we make a quick stop, and he obviously didn't care. So I stopped at home and quickly got a pair of my old sneakers, in quotes, still okay, but ones that I didn't wear that often, and like asked him to try them on. They fit, and gave them to him as well. Drove him to the autobahn and wished him also got him a bottle of water and wished him like all the best in the future. So like making a small difference here, yeah. But I think it's the problem is really it all circles back to treat everybody the way you want to be treated, and because not everybody is following that approach. As soon as you have people that are willing to give, you have some shady people that are willing to or that are trying to take advantage. Yeah. So for example, if you are willing, or if people are willing to give money to homeless people, then suddenly you have organizations that really shuttle in people to beg for money, that at the end of the night they take the money from those people away. Yeah. So instead of you actually helping real homeless people, you're just funding some criminal organization. Yeah? And then even with real charities, as mentioned, the example of the people that walk door to door that keep, let's stay with the lower number because I'm not sure, as mentioned, but at least 70% of what the people agreed to donate went to that person that knocked at the door. Yeah? Like, as long as you have situations like that, it's kind of like, and it will never change. It's human nature. There will always be some people that are just so selfish that they don't care who they screw over. Yeah, and yeah. With the approach, we never give money, but we will always give food and rights. Yeah, it's tricky. I usually don't carry food around with me, and while I don't mind helping, but I also don't want to get out of my way, in quotes, in terms of spending too much time to help a single person, because again, time is the one asset that we don't have to give away. Yeah, and so then here in Ukraine, especially when it's older people, I rather give them a little bit of money. And you also have to consider here, if I give them the equivalent, for example, if I would give them like, I don't know, like 100 hryvnia or so, which is like $3, which is obviously, it doesn't make a huge difference for us, but it's still enough for them to get some food, yeah, or whatever else they need it for. So it's actually like, it's really one of the things that's on my like long-term to-do list. So like grow our business further, and then depending on how big the business grows and so on, then yeah, like use some of the profits of the business, or a certain portion, so that it doesn't harm the business, but it also makes a difference, to actually make a difference. Yeah, so and so by, for example, yeah, like, well, I think for example, it's a great idea that there are homeless shelters, yeah, but they only treat the symptom, in terms of they only provide people with a place to sleep at night, but they don't treat the problem that those people are homeless. So then maybe, you know, like get to the point of creating your own homeless shelter, but in a way where people, I don't know, where they first get a proper shower, maybe cleaner clothes, maybe you have a hairdresser there to clean them up, and then maybe look into, you know, like help them with like government forms to apply for certain, yeah, like social security payments or something like that, or get a government funded apartment or something like that, and help them look for a job and get their life together again. So instead of just, okay, here's some food and you can stay the night and then kick them out the next day, actually try to set something up that makes a difference. Yeah. But yeah, all of that needs money, and that's why I mean, like, I rather take the big gamble here and focus on us being financially successful, like to a ridiculous extent, so that we can then actually make bigger change. But I agree with what was said earlier, like what Predator said, that also people that are not rich have to donate to make a difference. Yeah. And it's usually the people that are not rich are the ones that also give more. Yeah. It's like, once you're wealthy, many people tend to like, oh my God, I might lose my wealth, so I'm not gonna give anything. Yeah. And that's why it would be nice if GameStop goes into the millions per share. Then we would like get faster to the point of doing something like that. One thing that's also on my bigger to-do list, since I'm in digital marketing and that stuff, is to create some kind of foundation that basically hunts down, in quotes, scammers across the globe. So that whenever you have people that sell some overpriced courses that don't deliver anything, or that use misleading advertising to make promises that they cannot keep and so on, to then basically have, yeah, like a group of lawyers in place that are specialized, and maybe, I don't know, local PIs and so on, to figure out who's behind certain websites and organizations, and then see like with what kind of legal angle you can make sure that they pay for what they did. Maybe it will not help to recompensate the victims of those scams, but I think, you know, I think one of the reasons why there are so many online scams is because most of those people get away with them, yeah, or the fines, they might have made hundreds of millions, or even even more by scamming people, but when they get caught, they only have to pay like 100 million in fines or something, because only a fraction of the people in one country actually sues them, and so they might only be forced to recompensate those people and still end up with a big profit and maybe some I don't know, like some probation time. And so I think if you would have an organization that actually has the funds and the resources to go after those people, and then a few of the bigger scammers actually end up with jail time and or completely broke, yeah, that it might scare off other people in terms of should I really take the risk? And yeah, so those are a few things that I would want to do in the future. So to kind of like make a difference and help to, yeah, like make sure that on one hand, we live on a better planet. So if or when Irina and I may someday have kids, that they actually live in a world that's at least the same or better than what we have now. And on the other hand, to also make sure that people that are just selfish pricks that don't care who they harm along the way, that they actually get to pay their bill. And yeah, I might not get to do all of that, but it's definitely on the list. And one of the motivations for us to work hard is not only that we can live in luxury or something like that, but actually to be able to do that. So but yeah, so GameStop is moving slowly sideways. Nothing is really happening here. So I guess we're going to look at a few other stocks because that's what I anyway wanted to do. And I said time is the one thing I don't have super much of right now. So we're going to use it. And we're just going to, yeah, let's start with Bitcoin. So we start with a cryptocurrency. And there we also have a new data feed also from bar chart. And we have data since Bitcoin was like a few cents, which is nice. And hide the volume for now. It doesn't look that much in terms of like the drops that were in between if we look from back then. That kind of checks out nice. Like Kennedy channeling technique, destination channel, we hit exactly the median of the destination channel, which would make this here wave 2, which would indicate that we are in a wave 3 in Bitcoin in the 3 monthly chart. Now if we go to monthly, nothing changes here. We're just going to do that to adjust the wave points. Jump to weekly, things might get slowly more interesting, but also not yet. So basically on first glance, I would say like in Bitcoin, we will have a drop. I mean, we already had one, but actually zoom out again and check, because that might be by far not, yeah, like, might not even be. Let's see if we can figure this out. Ratio analysis, yeah, so that's the one chapter that I really would need to take the time and read again to make more sense of this. That's with extended waves. Okay, like one of the things that we have, if the book stays open, would be that if we go from 0 to 0.4, then our wave 5 could be sorry, my mistake. So if we don't have extended waves, then very often wave 4 will subdivide, and it's pretty much the case, it will subdivide the entire wave by the golden ratio. So either wave 4 would be here, so you have 0.82 up here and 61.8 for the rest. Or like in this case, wave 4, not perfectly, but almost. I mean, of course, there's like a few $100 difference here, but in the bigger picture, not much off, subdivides it here. So that is likely wave 1 and a complete impulse here. And then this is actually likely really wave 2, which means we are now in wave 3 for Bitcoin. And do we have something else in here? Occasionally, a correction retraces a Fibonacci percentage of the preceding wave, as illustrated in Figure 4.1. Sharp corrections tend more often to retrace 61.8 or 50%, particularly when they occur as a wave 2 of an impulse, wave B of a larger zigzag, or wave X in a multiple zigzag. A leading diagonal in the wave 1 position is typically followed by a zigzag retracement of 78.6, something I also didn't know. Sideways corrections tend more often to retrace 38.2% of the previous impulse wave, particularly when they occur as wave 4, as shown in Figure 4.2. Now we can check that real quick if we go to, like there you have to press the save button, but if we go back to GameStop and daily or hourly is okay, and sideways corrections tend more often to retrace of the preceding impulse wave. So the preceding impulse wave would here be, so that would be the entire, oh, that's actually going to be like tricky. That's not going to be the case here, I guess, because our preceding impulse wave here would be the entire wave 3 from here to here, and there obviously 38.2 would be at 61. Or do I measure this wrong? Or do I only have to, or is preceding impulse wave this one here? There we reach 50. 50 is what we reached. Okay, need to try that a little bit more often and try to apply it better. But zoom in there again and we go back to Bitcoin. Bitcoin, there we go. Yeah, so that's most likely our Bitcoin wave 1 that we have here. That's our wave 2, which looks roughly like a zigzag. And yeah, I don't know where those points don't add up nicely. So, okay, now, and if I now move that point here and so that's roughly what we're looking at here. So 1, 2, 3, 4, 5, wave 2, then here. Although the retracement here of, I don't know, depending on where we start, I guess. So, okay, that would be this point. And if we look from here to here, it actually is 38.2. So preceding impulse, not the entire one, but likely only the preceding wave. Yeah. Which means if we look closer in Bitcoin, weekly, and yeah, basically that likely is still, so that likely is still wave 1. Although on a smaller degree, we could probably, if that is our point 0, and that let's say would be our point 2, oops, using Kennedy channeling technique here. So I would say we haven't finished wave 1 here in Bitcoin yet, but if we use Kennedy channeling technique, that we are likely looking at something like the 1, 2, and then this would not be wave 3 yet. I mean, it could be, to be honest. It could be 3, 4, 5, or this could still be wave 3, and we're currently looking at wave 4, followed by wave 5 then. Obviously, that's not the impulse that will go up there. I would suggest like this, yeah, and then if wave 4 is not finished yet, then our destination channel for Bitcoin would obviously be much, much higher. Although that's then an extended third wave, in which case we would also accept a truncated fifth wave that could be lower, so it doesn't have to go beyond 0.3, but could also be lower-ish. Have to look closer for that. But that then in the end will make up wave 1 of the impulse that makes up this wave 3 here. So I think in Bitcoin, if we look a little closer, F5, 1, 2, 3, 4, 5, that likely A, B, C, and then another 1, 2, 3, 4, 5. So we have a little bit more downside in Bitcoin to come. to turn this into a zigzag. So if we then go hourly, that's the lowest we will get when we label those charts. Then this here would need to turn out as an impulse. Up, yeah, and it does. Just need to move that point. So that would be the first wave, then that would need to be a zigzag. It's not nice, but yeah. But still, and that here, what we currently have is kind of like, that would be our base channel, 0, 1, or 0, 2 with 1. Here touching the line would be 1, 2, 3, 4. Could go up further to this line, 53,000, but doesn't have to. And then we would see our wave 5. So if we get rid of that, if we label that, then we can see that wave 5 would be currently projected at 46,000, which would finish wave C and wave 4 here. Or it doesn't have to be honest, yeah. So while this would check out, there's still points that don't add up. So let B, C, and then move all of that. Yeah, now the 1 also got moved, sorry for that. So 1, 2, 3, 4, and 3 would be this point, and 4, 5. So yeah, like I think we still will see a drop, 10% in Bitcoin. And that's roughly where we'll set our alert. Maybe a little bit more, but that seems to be like a nice area. So let's set our alert at 47,000, roughly. Create alert, potential buy, and let's say 47,000. And okay, so we have our alert there. Might turn out wrong in terms of that it's not yet a buy. Why did I say that? Because we also have the rule of alternation, where we would say, oh yeah, which doesn't apply right now here. Oh no, still applies because when wave 4, because if we look here at this wave 2, and again we worked our way down to hourly, that also is just a simple zigzag. Yeah, now it could be that this is also, actually if we look closer, zoom, so we just look at this area here. Great. Up. Yeah, it's not perfect. It's also not perfect. So this wave 2 here, if it's just a simple zigzag, then the rule of alternation would require us that wave 4 is a more complex corrective pattern. Yeah, so, and however, it could also be that this here is a double free correction, so that point 2, so I'm going to move that C real quick, point 2 actually would be, for example, here, and then from roughly here to here we would have another zigzag, or maybe it starts somewhere earlier, but likely here and here. And so that we have basically zigzag, wave X, and then so, or W, X, Y. Yeah, it's not a perfect triangle, but that would be the other option, in which then zigzag as wave 4 would be okay. But besides that, if we, yeah, hourly chart again. So besides that, if we look at what we have here, or daily chart again, so if that here is just a regular zigzag and not some combination that goes till here, then this here should turn out as a more complex correction, which means let's get rid of the sub-labeling here, which means it would be a zigzag followed by another zigzag, so it turn into a double or triple zigzag or into a double free or triple free corrective pattern, which means in Bitcoin, while double and triple free corrective patterns usually don't retrace further in price, so we stay in price where we are right now, or we don't fall lower, and 47,000 might hold as resistance or as support, we would see some sideways movements for probably, I don't know, if we have a zigzag followed by something, followed by a triangle, probably till the end of June or something like that before we go up further. If, however, this here is a zigzag followed by a triangle, then here the zigzag could be sufficient. And then technically, and again, jumping to the hourly chart, could that already be finished? So, yeah, doesn't really look nice if we have it like this. So, yeah, that looks way better. So there would maybe be still some upside, as you can see here, till 52,000, and then followed by another drop, and that would then be the end of that correction. So 47,000 seems like a good point to buy here, and we're going to keep that alert for that price level. Now, another interesting point would be if we try to label this wave 3 here, then it comes up with a very weird labeling, 1, 2, 3, 4, 5, yeah. Which obviously doesn't make a lot of sense. If we would go from a very small scale, then this could be 1, 2. Then we have our breakout here, which would be wave 3, followed by a flat correction, and wave 4. And then wave 5 would actually be, yeah. Technically, wave 5 could be here. But then this would only be the first impulse, 1, 2, 3, 4, 5. So we would have a wave 1 up. That's actually how it labeled it automatically or not. That was a wave 1. Yeah, so actually that's likely the count that turns out true here. In which case, yeah, wave 4 here corrects further than wave 3, 4 of the previous impulse. Don't need that. But yeah, so Bitcoin, in my opinion, we will likely see a drop. So it might go a little bit up further, but then see another drop to 47,000. Depending on how this correction should be labeled, that drop might turn out to be bigger. And then the logical point or the logical next resistance or support level would actually be in the area here. In which case the labeling would need to be something like 1, 2, 3, 4, 5. Yeah. And, well, actually no, because we also have somewhere, don't know where it is in the book, but we can look it up at some point, that when we have an extended first wave, which literally is the case when we label it like this, that's definitely an extended first wave compared to the rest, then the correction would likely fall into the area of 1, 2 instead of the area of 3, 4 of the previous impulse, if I remember it right, yeah? And as such, and again, that's considering that this here is a simple corrective pattern. So this here might turn into a double zigzag or some form, and we might actually see lower prices. So long term, however, still we would be, if we go back to monthly, we are still in wave number 3. So that wave number 3 here has not finished yet. So even if we were to fall further, long term, I still think that this would be, that we go up further from here. So if we go back to daily, so if we were to buy here and it turns out that it was too early, then the next possible points would be somewhere around 30,000. So I'm going to add another alert here. Would not happen very fast, but so 30,000. And yeah, but overall Bitcoin long-term up, and currently, however, still 10% down. Potentially more, depending on if that labeling here is correct or not. Yeah, but I probably will start buying at 47,000. So, and with that, we jump back to GameStop real quick to see what happened or if something happened. And we notice we're just moving sideways, yeah, which might indicate that this wave 2 here hasn't finished here, or it could already be wave 1, 2, and we're now waiting for wave 3 to finish this third wave down here. So we're really exactly in the area right now where we cannot say for sure. We either need a movement stronger down or a movement stronger up to get some kind of confirmation or invalidation of our labelings. Now, okay, so we've labeled Bitcoin, like just double checking that the analysis is saved. Yep, just gonna get or move that properly. Yep, so now it's adding up properly, and get rid of that small labeling down here and save that. And with that we pick we pick a stock, and we pick let's start with ExxonMobil. Let's start from the bottom there, and we're gonna quickly double check historical data here as well. So we have data since 1987. That's already a good sign in quotes. And here ExxonMobil has data probably already longer, since 68. It's going to be another problem. So here again, edit instrument. I wonder if I can set that up as default. So Google, we're going to check that real quick for that. Configure workspaces. No, so there I cannot set it up as default. Sucks, so I'll have to do that manually. And now again, edit instrument. So we have here Google for historical data, and then we'll just have to scroll back. And again, it starts at 1970. Again, that's where time starts for computers. And with that, we basically, let's look from here roughly. That's higher than this, no? And what do we have before 1970? That's exactly one of those cases where if we label it here, or if we were to label it here, where this would likely be 0, 2 with a parallel through 1. And then that's kind of like 1, 2, 3, 4, 5. But then the problem is that is 1, 2 doesn't make sense. 1, 2, 3, 4, 5. And then what's the height that we had here? Like 93, 95, 96 something, 96, 12. And the height that we had here was higher. Yeah. So 1, 2, 3, 4, 5. Drop as like corrective pattern. 1, 2, 3, 4, 5. 1, 2. Doesn't work out. 1, 2. It would make sense that we have a 3, 4 here, so that all of this from down here to up here is wave 1, or technically till here because that point is higher. So is wave 1, and then the corrective pattern retraces into the area of wave 3 and 4 of the previous impulse. Yeah, so we lack a little bit of data here, I said, but thankfully not much, so it might still turn out to be right. So, but wave 5 should be here, and yeah, I think that might check out. Maybe not super perfect, but we already see wave 1 or wave 2 a sharp correction, wave 4 a longer correction in comparison. And yeah, we would have a nice destination channel that we hit here, and then we kept moving there. So, and then the corrective pattern that we had here is basically retraces into the area of that, which means overall, that might not be a zigzag, that might be some other form of corrective pattern, doesn't really matter, which means for ExxonMobil we would overall have this here as our wave 1 and that wave 2, and we are now in our progress of creating wave 3. So our base channel would look like this, and there is again some points that don't now, yeah. So our base channel would look like this, which means we're actually expecting to see that this is like 3 monthly chart, so we're looking at multiple years here to see a breakout from here. Now if we look closer and try to auto align and again hide the volume, I could actually chart settings, and their top inset, yeah, that doesn't need to be like there. We can say 50, and let's say 250 at the bottom. It's too much. Okay, 150. Yeah, much better, so that the volume doesn't overlay our, maybe there's a 100 on top, so we also see the labeling better. Interesting, then it kind of like, no, it still works out, so, but we don't need 100 there, so 75 might work. Apply and save defaults, yep. So in ExxonMobil, basically the last year low was like, yeah, like our starting point of wave number 3, which indicates, or which makes it likely that this here is probably wave 1, 2. Currently in wave 3 here as well, and wave 4, 5. So now we're going to look closer. We are in monthly. On weekly it already starts to check out a little better. And where we could also say 1, 2, yeah, like, I'll have to check that. Let's go to daily. F5, wrong button. F5, so points are aligned. So where this down here would obviously be a corrective pattern, and not perfect, but nice looking zigzag. And this up here would need to be an impulse. Yeah, okay, I guess. Actually, it's like now, I'm not sure if it's an impulse or if it's labeled as a leading diagonal. Let's check. Impulse, okay, so 0.4 doesn't reach into area of wave number 1. And which means here we would have the next impulse wave that we can label, which is then wave 1 out of 5 that gets us up here. And the projection here is that we have wave 1, which likely can be labeled again, yeah, like this. Also looks nice. And then here we already, that's wave 5, high at 62.55. And that's a higher high. Now, technically, that entire thing here could be already the correction of wave 2, or that could turn into a flat correction, and basically where we still have a drop here to come. So it's kind of like tricky-ish. If we jump on hourly, then we don't have, we don't get historical data from Google for hourly. And yeah, like dealing with data sources is the worst. Yeah. So okay, if we stay on daily, but we still have the data from point 2, which then would mean if we look here from our potential point 2, then we have a 50% retracement here, and which would make this here, yeah, like from this point, that point, and whatever the low here is, 58.75, and that one here is at 59. So that would this make 0.2, and we would be in this third wave as well. So, and back to daily we jump, where that is likely very small. And this would then be wave 1, 2, 3, 4, 5, that takes us up here. So technically, for example, we could now open a buy position in Exxon, which we're going to do, with either, if we believe in the smaller labeling, we could basically say, okay, we have our stop loss at 58.75. So so we could say here, let's buy for $100, no leverage, and at, what did we say, 58.75 would be our stop loss. So our risk is 2%, and our upside here would be, yeah, like potentially we could go all the way and take already the 0.3 as a target. So, but overall, our minimum upside here would be probably 68 if we want to look at it, or 70, sorry, 70 for a potential wave 3 target. So if we take this and this and this, then we need a breakout from the channel if that is supposed to be an impulse, yeah. And so 70.88 would be a profit target here, short term, or we could think of it as a long-term position. So, and already aim for the higher, but I think, what do we have, 70.88? Let's go with that one, 70.88. So we have like 2.8% risk with a 70.5, a 25% reward. So seems like an okay trade to me. So, and there we're gonna, yeah, like just keep an eye on this. Now I said this here should then turn out similar to this, although that 0.5 should either align with that 0.3 then, or this here is will become wave 1, 2, 3, 4, 5, and that 3 would be higher. We'll see that over time. So we got one stock labeled, oh my god, and one cryptocurrency. Now back to GameStop, and there we still, yeah, like, looks like we are moving sideways but slowly down. So, which would be okay, and then eventually, probably towards the end of the day, when the put options would start to, or the short sellers or, yeah, put option holders would try to pressure the price below max pain of 152. So we might see stronger downward movement later today. And yeah, so let's jump and label something else. Oops. So back here, and yeah, let's try an ETF. Let's try, there's also going to be a data issue, I guess, because if we take SPY here, yeah, do I have that from bar chart? Let's check SPY. Yep. Much better data, so I'm gonna quickly switch data sources here. So HEG, so smart, and QQQ, and we already got SPY, so next one VIA, and VU, and VTI, and VTV. So with that we should have all of them, and get rid of the smart ones. Those are from Interactive Broker, and as a result we should then still hold 10. Yep, we have 10. So if we go here to SPY, and we have data since 92, and what's the, how does it look? There's data since 92, so kind of like that one looks nice, yeah. Now, I would say here we might have wave 1, 2, and we're also in wave number 3. So, on first glance. Okay, undo this. And although I wouldn't agree with 3, 4, 5 here, because we didn't even have a breakout yet, so I would say we are still in wave number 3 here. So I'm going to manually label that instead. So 1, 2, and we're still in wave number 3, in my opinion. Why can I not select or tag that on the first candle? Like, it's lower. Yeah, doesn't really matter that much, I guess, but still. And so this would be our overall base channel here, and we pretty much just broke out of it. So we would have more upside here to come, and then a drop down to the base channel again. Now, if we go from that to monthly, already gets a little bit harder with zooming properly. And then I would likely end up saying that from here to here, we have our wave 1. Up. Ah, cool, that's zoom. Found another shortcut by accident. Okay, got it. And but yeah, let's ask auto labeling here for this. And okay, auto labeling says this, and I would likely say that, although then potentially like this, and yeah, like that would be, doesn't look super nice, but let's check if we use Kennedy channeling technique to get our destination channel. Now we already went through, and now as said, if we take the double of the destination channel, then it would give us a target of maybe 600. So still some upside here, if that count is correct. So if I open that one new alternative count, and it opens another tab, okay, that's them. If I go here to monthly, does it switch here? Yeah. And I go here on this chart and I copy everything and I just paste it on here. Yeah, obviously that doesn't work. Great. So again, we would have our 1, 2, and technically we think we're still in wave number 3. And here, auto labeling would suggest this, and with a target at 560 for wave number 5. Yeah, I mean, the when is a different question, but for that, this here would be another impulse. And that obviously doesn't check out, so the things here just don't add up. That's what but based on the price movement, it would need to be, because that price here gets so low that it would, yeah, so, which means that this labeling here is very likely incorrect because of this dip here that we just cannot have in there, which means our primary labeling here is what makes way more sense. And we might be able to confirm this part here. Yep, checks out. So another impulse that looks nice-ish, and which means if we go down to daily and move that, we are here in our next 1, 2, 3, 4, 5. And I think that checks out. 1, 2, 3, 4, 5. Wave 2, although likely I would say wave 2 goes till here, and we're now here in wave 3. So that would be, I mean, we would have to check here. The low here is at 319.80 and that low here is at 322, so tricky. Especially tricky because this can be labeled as a zigzag and it's probably almost perfect. Yeah, like not super perfect in price, but in time, so more likely really like this. Okay, wave 2. And which means that we are then currently here in this wave 3. Where, yeah, I'm not sure if I would label it like this, but if we want to confirm, then we need to probably label it like this. So that would be another 1, 2, 3, 4, 5, and that here would be 1, 2, 3, 4, 5. And yeah, might be challenging to confirm this on daily, but still works out okay. And then with a correction here that it labels completely wrong. Okay. I mean, here that point is higher, so it would need to be a flat correction, A, B, C, but then usually wave C would not be that long, or it would be an expanding triangle, A, B, C, D, E. They are also not nice, and if it's like this, probably the Fibonacci relationships don't hold up, so but which means we are currently still in this third wave of a third wave, and therefore there should be likely here we would have our 1, 2, yeah, and so we would have another 1, 2 here, and currently in the progress of 3, 4 or something like that, which is actually not this. Okay. Need to move a few points here. So this wave 5 becomes this wave 3, which means this wave 5 is this wave 3, which means this wave 5 is then this wave 5 here. So tap. Well, it's a little harder here. Here potentially we could also buy with our stop loss at 383.9. So SPY. Oops. And cannot set a stop loss here right now. Okay, but yeah, open trade. So our stop loss would be at 383.9. So we have a 7% or 8% risk, and our take profit would be usually wave 4 would divide, or not usually, but often wave 4 would divide the pattern into a golden ratio. So let's assume if this would be our wave 4, although it isn't, so we have like 450 potentially. So let's say 450 for now. Which is, yeah, like that's like a 1-to-1, so it's not so great. Or we could just go for the bigger wave. So in this case, we would have I would pick as price target 487.72. That sounds like a reasonable number. 487.72. Still doesn't make this trade as great as the other one, because here we have like roughly 2-to-1, but still, and got something else labeled. So for now, so, and back to GameStop, where we are still doing nothing, just getting a little bit more sideways movement, yeah. And other than that, yeah, not much going on now. And let's pick another crypto for the fun of it. Let's pick, I don't want to pick Dodge, so let's pick ADA, Cardano. Oh, there we don't have that much data, so might not be able to label that. Or maybe we are. Yeah, I'm not so sure if I would label it like this. 1, 2, 1, 2, 3, 4, 5, and there it's also likely 1, 2, 3, 4, 5. So, but then if we label it like this, we are basically in another third wave. That obviously goes here, and and at the end of a potential other third wave. So here we could buy with a stop loss at 126.30, 129. So ADA, which is like a lot of potential risk here. So from 190, and yeah, let's. If we also label that subwave here, yeah, that doesn't check out. 1, 2, 1, 2, 3, 4, and that would be an extended fifth wave then. That doesn't check out. 1, 2, 3, 4, 5. Then that would be 3, 4, 5. So that would. Yeah, gotta hate the flexibility of Elliott wave theory. Let's zoom out. Yeah, not so much. Daily. What if this is 1, 2, 3, 4, and currently we're waiting for wave 5 here, so which could already be the case here. Now, if that's the case, then this here would be another impulse, but an extended third wave, which here it labels it with an extended first, but I think it's an extended third. 1, 2, 3, 4, 5. So 1, 2, 3, 4, an extended fifth. And then if we look into chapter 4, Fibonacci relationships or ratios, chapter 4, then when we have an extended fifth, or if we have an extended third, then wave 5 and wave 1 would usually be the same, which is not the case here. Oh, but in that thing here, and that might actually check out. So if that's our wave 1, for example, and our wave 5 would then start. Okay, no, then we don't. If we have an extended fifth wave, then taking our wave 1, oops, as an extension. And then wave 4 to 5, oh no, sorry. So like wave 1, 2, 3. So that would be an extended fifth, an extended third, it's 1, 1, 1, and the rest, okay, there we, okay, so I can find the extensions that we would use here. But technically, we would already have our potentially end of wave 5 here, so that we are currently working on, or that we already reached. So our destination channel would look like this, and reaching the median of that channel would already be the price target. Now there's still some upside potentially. Question is if it's worth, because here our stop loss is like 50% almost losing versus 25% profit target, and it doesn't even mean that we will get there. So Cardano or something where I likely will add an alert around $1. Yeah, $1. And save that. And oh, here we have some movement now finally on GameStop on the 5, or like it's not strong movement, but it kind of like tends to confirm. Now, if we were to label this as an impulse, then that would be our wave 1, 2 very likely. So we're currently waiting for a breakout here to make it wave 3, 4, and then eventually wave 5, which will actually be then this wave 3. So kind of like checks out so far. Busy today, so can't watch, but dropping by to like and say thanks for keeping the streams up after. Sivo then, thank you for stopping by and thank you for the kind words. Yeah, no problem. I'm anyway using the time to label other things as well. So yeah, because for GameStop right now it's anyway just again boring sideways movement up mostly. So just have to be patient. And yeah, let's pick something else. So we had now 2 cryptos, 1 stock, 1 ETF. So we pick another stock and we just pick from the bottom here. And again, we start with the 3 months. And again, our data here starts in 87. It seems like we don't buy ADA because we don't know. And the stock we have now is Walmart, so WMT. Probably also older data here, or yeah, 72, which is nice, which means in combination with Google, great, edit instruments. So in combination with Google, we actually should get full data here, historical data Google. I will have to email Barchart to figure out if they, if I can change something on the subscription to receive the data back till earlier, yeah, and Walmart is actually, yeah, it's also going to be a challenge to label. I don't know why it detects the points wrong here. So the low here should be at 1 cent. Yeah. Ah, okay, because 1 cent would be down there. And it would say 1, 2, and we would also be in wave 3. Yeah, that doesn't look so nice. How do you label that? Like, I mean, you cannot use Kennedy channeling technique, because if we say here, no matter what we pick here, if we say this here is our wave 1, and of course everything's distorted here for some reason, we never have a breakout from here, yeah? And even if we would say our wave 1 is from here to here, then the retracement that we have here is just ridiculous. So, and if we switch to arithmetic view, maybe that makes more sense for the beginning. So that we have, like, from wherever we start, 1, 2, and then yeah, wherever we start, like for example here, 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 and have our breakout here, wave 3, and a very long wave 4 that might end here, or yeah, 1, 2, likely might end back there actually. So wherever our wave 1 is or starts, so that would be like this, 3 and 4 and 5 would actually then be the top here, yeah. So we would then have our destination channel and we would have a throw over, so we bounce off here, but we reach the medium probably of the duplicate channel width. So if we tap, yeah, so kind of like okay with that, which would mean that this is wave 1 and we're currently waiting for wave 2, and then here the retracement would be okay, and then the retracement that we would expect here for Walmart would be, yeah, like more, or because this here would be 1, 2, 3, 4 somehow, so like that here would be up, yeah, not like this, but so from here to here, yeah, so, and what we would expect based on, if that's our starting point, yeah. So there we would look for a 50% drop or so, so I would expect 100 seems nice, so I'm gonna set an alert here, trade alert, potential buy, add 100. and get rid of the channels for now and switch back to logarithmic, and there it will not look so nice. Our starting point now is here, which is obviously should be down here. Up. It's tricky, and here our destination channel, if we look at logarithmic, yeah. But I don't think we can label that properly using logarithmic view, but if we use arithmetic, it starts to make more sense in terms of 1, 2, 3, 4, 5. I mean, still not perfect, but I still think that that might be what we're looking at here. And therefore, if we look a little closer, maybe weekly or so, oh, wrong button again, we would actually currently look at the 1, 2, 3, 4, so that would be the base channel technically, breakout, 3, 4, and now waiting for wave 5 to make this basically the beginning of a zigzag, so that would be a leading diagonal. Yeah, not like this, or actually could, no, like that it would go too far, yeah. But if it's like 1, 2, now it's going to complain because it's as an impulse, but it should be a leading diagonal, and wave 5 would then be potentially on that line here, which would make up wave A of then whatever where wave B goes, and then wave C would take us down further. And if it would depend where wave B goes, obviously, so how far wave B goes here, but yeah, like I think we will see 100 for Walmart, so, and delete that, save that, and yeah, so haha, that drop to 130 in GameStop got me excited, finally got rid of a lot of ugly patterns and got a singular corrective, like you were talking about. Charting GameStop since March has really been a lesson in letting the corrective wave develop before labeling it. Yeah, it's the same thing that I'm suffering. Like, it's usually we just want to have it done and we jump the gun. However, you're saying the drop to 130 got me excited. Finally got rid of a lot of ugly patterns and got a simpler corrective like you were talking about. Now, the question here is, if you say simpler corrective pattern, but we still have a double free corrective pattern in our labeling. So if we look on daily, we still have a WXY here that we're expecting, and the alternative count would be just, and there also need to switch here. We already on, okay, there are daily as well. So in our alternative count, we would have just the triangle, but the relationships between the waves don't add up, and the wave E here breaks out too much of that triangle to the bottom to so actually I would say this is invalid labeling, but it's still an option right now. And in our main labeling, it actually is like zigzag, zigzag, and then triangle, and here the Fibonacci relationships so far hold up perfectly, where the only question is, if we look on hourly, if basically from the wave C of the triangle, if this is already the wave D, you see it already reached the target, price target for wave D. However, then this would need still to be a zigzag, and it's definitely, it looks way more like a 1, 2, 3, 4, 5 impulse, which would mean it's wave A of the zigzag. So we're currently expecting basically a zigzag downwards, and I expect it actually to go quite far, because if we would have a perfect zigzag in between here, then the relationships of that zigzag should match up like this. So, and yeah, like maybe it doesn't go that far, but I basically, depending on how perfect or how neat that zigzag develops, we would go again to 140 and then go up to 170 again, and then go down for wave E again to 140 and then go up. Yeah, so it's like we are waiting for a few more candles to see which it is. So, but yeah, so that's where we stand right now. Or it could be a very, very small zigzag. If we look closer, we could technically label 1, 2, 3, 4, 5, and then that A, B, C, or C, depending on which one here is higher, yeah, 66, 41, 66, 47, so yeah, and then this here would be 1, 2, waiting for wave 3 right now, 4, 5, so to finish the A, B, C zigzag here, and then we would have, but then the bigger zigzag, this one A, B, C, wouldn't be very nice because here we have this very long wave A, then we have almost no correction, so no counter trend move, and then our wave C would need to be very, very short to only go to 170, or in that case maybe 174 to reach that channel boundary. Yeah, so that's why I kind of expect it to drop bigger right now and to fill out that zigzag pattern better, yeah. And yeah, charting, I mean, honestly, like the whole charting GameStop also taught me a lot of lessons, like number one, wave form is important, so that if we take, I can actually just open new one, or not like new analysis, whatever, let's call this one playground. So if we take the biggest labeling, so the monthly chart, where originally I really was like making dumb mistakes and would say 1, 2, 3, and that drop is wave 4, and now we're in wave 5, that obviously doesn't add up because we have years for wave 1, years for wave 2, and suddenly wave 3 and 4 should be in less than a year. So, which means that obviously wave 3 here is not finished, yeah? So that's one of the mistakes that I made in terms of paying also attention to the looks of the waves and the relationship in time. And then with corrective patterns, it's tricky, but there I guess rule of alternation is the key, so don't save that. So to pay attention to wave 2 here seems like a simple zigzag, and therefore wave 4, or I mean not super simple, but still, so wave 4 here should be a more complex pattern, like a double 3, for example. So, and yeah, like, so those are few of the lessons that I learned. Now, the latest lesson that I learned in quotes, or that I'm not sure yet, but depending on how this plays out, where with this alternative count, where we only have a triangle here, this wave A here, if we then use that to determine wave C, or wave B, no, wave C, we see that the point B is far away from the 61.8 retracement. So, but according to the Fibonacci relationships, that point B here, or the length of wave C to be more precise, so this wave C here should be 61.8% of that wave A. So technically, we can either say that wave B didn't go high enough, or we could say we point the 61.8 retracement on the top of that point B, and kind of like wave C would actually be expected to go to 110 in that case, yeah, to fulfill the Fibonacci relationships. More likely that wave B is too short because to make it a triangle, yeah. However, when we look at the labeling with the double 3 corrective pattern, probably best on maybe even on daily, yeah, then we'll see that if I measure, because here it's not the start of the triangle, it's a zigzag, zigzag, and the triangle starts here. And if we take that distance and now we go to point C, we see that our point B is precisely on the 61.8 retracement. So the wave C is precisely 61.8% of wave A, which is how it's supposed to be. So if now our wave D also plays out as 170, which technically, if we say this is already our wave D, would already be the case, because here our wave D, that I don't say anything wrong, should be 61.8 of wave B. So if we take wave B, and now our point D should basically be at the 61.8. So we see it should be around 170 to have perfect Fibonacci relationship. So now the question is, if this already is the ABC zigzag and point D is already here, which would change the channel of the triangle to this, and we would now actually expect wave E at a lower level, or because again, when we look closer, it looks like this is only wave A of the ABC zigzag that makes up that part here, that we actually will see another drop, go up, and that will then only be point D. Yeah. So, but yeah, I think there it's with Elliott wave theory. I think it's really about doing it. Like the more you label, and then maybe even either in a test account or in a real account, making trades based on it, based on your labeling, and then learn from your mistakes. You know, like, but you already have a solid plan, and it kind of like, while it might not provide you always with perfect profit targets, because that's obviously the thing you have to figure out with Fibonacci relationships and trend channels and whatnot, but it gives you very precise trades or entry points in terms of, or at least gives you very precise instructions for when you've been wrong. So your stop loss, if you would short the stock here, you know your stop loss would be 166.47, because if the price were to move higher, it invalidates that 0.2, which means your assumption was wrong. Yeah, and yeah, like, so I think, yeah, I still think it's like one of the best strategies out there and one of the most accurate ones, but it's also very, very flexible, and I think only practice gets you to run into different patterns often enough to actually understand them, how they work, and how they should be applied, or when to apply them, or and so on. Yeah. So, but yeah, so we're still in the sideways movement. As said, we're expecting, or I'm expecting, a drop down somewhere here-ish, small retracement, and then a further drop to finish up. Yeah, like actually that would then be wave one. Then we would need another corrective move up and another move down. So yeah, gonna have to wait and see. Technically, however, it could also turn out that this is wave A, that here is the zigzag wave B, and wave C only takes us to 152, which would then be then this point B, and we would have A, B, and another move up, which would then lead us to point D. However, one other thing here, when we zoom out again, I wonder if there's a shortcut for maximizing, yeah? And not daily, but hourly. We can also see or notice, and I'm gonna hide the sub labels here real quick, the visibility less than hourly and visibility less than hourly. We can also notice that there are relationships in terms of time. So this here is 3 days. Then if we check roughly, wave B was roughly after 3 days. Then if we take from point B to C, we can see that it's roughly after 3 days, or 2 days, sorry. So, but same distance, yeah. And then if we go from point C to D, we would expect it to also be roughly in that area. And therefore, that's why I expect that this is just A, B, and then we get to wave C. So today we might have a boring disappointment that we close a little lower, and then on Monday we might still go a little lower, and then probably, wait, no, that's already different dates. So basically with those wave relationships, because now those lines are weeks, yeah, so it's weekends, so that we have sideways movement, and by the end of next week we reach that, or Thursday next week if I'm not mistaken, 25th. No, that's even longer away, yeah. But you get the point that in the future, at this, once we have those candles, yeah, that we roughly here or here-ish will reach our point D, and then we'll have to wait the same period of time, or roughly the same period of time, to reach our point E before we actually go up, yeah. So might turn out to be wrong, but that's one of the lessons I learned, that the form of the wave patterns is very important, so that they look proper and not, yeah, like don't add up at all. So in terms of cramping things together. Because if we would cramp that together and then point D would be here and point E would be here, the triangle would kind of like look like it's compressed, or like stretched on one end and compressed on the other. And yeah, don't think that's the case here. So, but yeah, now we labeled Walmart, ExxonMobil, and we labeled ADA and Bitcoin, and we labeled one ETF. And yeah, let's pick another ETF, QQQQ. Again, double checking data sources here. Data since 99, and we have here data since 99. And there obviously that is wave 1, 2. So with some charts, it's so easy. This is wave 3, and we're still in the progress of wave 3. So with some charts, it's like literally you can see the patterns super easy. Now here it would say wave 3, 4. I personally would like to disagree with that. Simply again, I mean, sure, in terms of duration, that one was a year. That one is now 1.5 years roughly. And here the projection would be, we know that in Elliott wave theory, very often in an impulse, two waves tend towards equal or being equality or equality, so tend towards being equal. And yeah, I don't think that we have our wave 3 finished here yet. So personally, I would say here, and again, we could use Kennedy channeling technique. So I would say that we're still in wave 3, and Kennedy channeling technique would tell us we would expect a drop down to the base channel for wave 4, or the twice the distance also sometimes happens. So technically it could be that our 3 might be here, 4, but then also in terms of size, that doesn't look like a super complicated corrective pattern when we look on monthly. I mean, it looks like not like a perfect zigzag, but still. And then in relationship this here, so in terms of length relationship, that would just be weird as a corrective pattern. Now this here might be, but it looks like a more complex. If we would have 3 here, then this would need to be some kind of flat correction or some kind of triangle correction, but starting with a flat, so double 3 with a triangle or so. And I don't think that's the case here. Now, as a result, if we look closer, yeah, it doesn't change much here on weekly. We get rid of that channel for now. And yeah. Although it might also be that in some of the ETFs, depending on how they are composed, that Elliott wave theory doesn't apply. Yeah, that's one thing that we have to throw in there. Now, I'm gonna double check what's in there, so how that's composed. Same companies in the NASDAQ 100 offering exposure. The NASDAQ is composed of 100 blah, blah, blah. The power shares QQQ ETF could be affected by significant price swing and with the index and generally economic trends. Okay, so it should consist of the top 100 companies in there. And we are looking logarithmic. If we look arithmetic, it doesn't get much. Oh no, it actually gets better. So might make more sense again in arithmetic. So we're gonna zoom out again, but yeah. So if we then pick our base channel, then that would be like this, and we still wouldn't have a significant drop. However, then I could, yeah, like then go from here. Then it would say 1, 2, 3, 4, 5, which would make up our point 3 up. What wave 4 up? Let's try this again. Up, wrong button. So this would make up our point 3, and that just doesn't add up super nicely here, so we'll have to adjust that because they don't have the same starting points. Now it will add up nicely. Tap, tap, tap. Zooming out too far. And yeah, now it complains about 0.4, of course, so but basically it would indicate that we don't have much upside left here, although if we label from here, it will likely tell us that we go higher. No, also not. So it would say like 360, drop down, and then 382. So we would likely, 362 is what we're currently very close to. So we are at 340 and that's 362. So it would likely, yeah, like we likely expect to see the end of wave 3 very soon, and then with a potential wave 4. So I would here, yeah, like not sure where I put an alert here, to be honest. I mean, first of all, we would expect this wave 4 drop, then we reach that wave 5, which should then be this wave 5, and then we would expect a drop here. So I'm gonna just set an alert. Check for potential entry at around 250. So top. For those of you who are wondering why I'm doing this, it's because I want to have my Popular Investors account more diversified. So by focusing on the top 50 stocks in the Standard & Poor's and the top 10 ETFs based on their assets under management or how much money is in them, top 10 cryptocurrencies by market capitalization, and I would likely also add the DAX 30, so the German 30, and probably some commodities like oil, gold, silver, and so on, where I'm still checking for data sources in order to diversify my Popular Investors portfolio better. And even if I label or think that there will be some kind of correction or crash or whatever in the stock market, that I'm hopefully still able to find some assets where the labeling checks out. Now, it's going to be some work to label everything now while we are rushing things right now, but to really label it detailed, it will take some time. However, the bigger selection also gives the benefit that if some labeling is not clear, I can just set a price alert or alert in my calendar to remind myself to recheck the labeling at some point in the future. And on the other hand, we definitely, if we monitor a bigger amount of stocks and other assets, we should always have a few charts that are very, very clear to label. Yeah. Now I'm just going to check an email here. Okay. Okay. And improvement. Dum, 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 dum. Okay, email answered. So yeah, forgot where I left off. Yeah, but so basically that's the whole idea behind labeling more of those things. First of all, get more practice, see different chart patterns, and diversify the portfolio. Now, I know most of you, or many of you, are 100% in GameStop, and with my secondary and third portfolio, that's also the case for me. But with my popular investors portfolio, it's something I cannot do. And yeah, therefore, I wanted to change my strategy there to diversify further. And yeah, like when GameStop is not moving and we don't have anything else going on, then we are using the time to do that. Now we've labeled 2 of the ETFs. Can I tag them somehow? Flag? Yeah, that's cool. So we can, do we see that flag somewhere? Oh yeah, on the front, that's cool. So we labeled SPY, and that's actually really, really cool because we can basically label things in terms of how sure we are now with, or like we can use, I mean, for now I'm gonna just, the ones we did, I'm gonna label them green, but we can then in the future vary between like, whatever, something needs to be, oh, Walmart we didn't label. Okay, we didn't, I thought we labeled it. Maybe I just didn't save it. That would be a little bit pity. So, clear flag. And Tesla should still be, Tesla is also not labeled anymore. Maybe it's because we switched to the alternative analysis feature. So 3, 4, and this here is wave 5, turning the entire thing into wave 1, 2. So yeah. And here actually the expectation is that this is here A, B, and wave C would be at least at 460, but as said, based on the bigger picture, 468, yeah, based on the bigger picture, I actually expect it to go further. So zoom in a little bit and get that right in time as well. So basically in early June, would expect to see 468. And I think, do I have an alert still for that? There should be, or not, Tesla. Yeah. Might not edit alert. Price crosses, symbol Tesla. Ah, because it's tied to smart. So delete. So it's tied to the old data source. So that was 468. Potential buy. Although, as said, for Tesla, I actually expected, if we look at this, that it will fall further. So anyway, so there we have our alerts, watch list, check GameStop, and yeah, nothing happens here. So labeled this. We also labeled Bitcoin. Did it save Bitcoin? BTC. Yep, saved. And there we have 2 alerts. So we're gonna flag that as well as green. That's cool. Cool. And technically I could come up with like different pattern or different icons to indicate like that it's currently in a wave 1, 2, 3, 4, or 5. But yeah, like, and we labeled ADA, but the history is quite short, so, but yeah, we labeled that one. And we obviously labeled GameStop, and we have a preliminary or temporary labeling for AMC, which is not visible. Okay. Okay, we don't have a labeling anymore for AMC. Good. And with the ETFs, we labeled those 2. Cryptocurrency, we labeled those 2. And SPY, but didn't we label Walmart? Like, I think we dealt with that and had to switch to arithmetic scale here and zoom out to kind of make sense of that, which likely would 1, 2, 3, 4, 5, 1, 2, 3. I'm quite sure we labeled that since it started, well, yeah, so 1, 2, 3, okay, interesting. I would have said 1, 2, 3, 4, potentially even till here, 5, making this wave 1, 2, with another breakout then from, yeah, making this then wave 1, 2, with breakout here for wave 3, so that's what I would have said. So from back here, 1, 2, and this is now wave 3, and wave 4 potentially wherever. And that also adds up nicely in terms of, if we look at the destination channel, our wave 5 hits the median nicely, so yeah, I don't know why they don't add up properly, so probably because the starting points don't add up. Now it does, yeah. And now that corrective pattern here could also be slightly different and could go further, but I think that's how it is here, so. And yeah, like then here, 2, 4. 4 is then here on this candle, okay, yeah. And a little bit harder. But basically, if we move closer, so go as far as daily, it would then indicate that from this high, and I really think we labeled that, yeah, that this here would be the first impulse, that here would be a zigzag in some way, probably not like this, but A, B, C, yeah. Or that's not even the first impulse, because so like in terms of Kennedy channeling technique, that would be then wave 1, 2, 3, 4, and would make this leading diagonal, or maybe not even. Yeah, let's check. So it would be 1, 2, 3, 4, and yeah, wave 5 would not be down there in that case, because that would just be yeah, I think we labeled that, because there we can then do this, and wave 5 would likely be here, which then in return will become wave 1, and then we have some wave B somewhere, and then a wave C that actually takes us over there, or down there, or however you want to look at it. And in a perfect world, that would look like this, and we would see a low at 100. Yeah, and I think we even set an alert for 100 for Walmart. Yeah, like, where's that alert? Yeah, there we have an alert. And it's also set for smart. Why is it still set for smart here? Delete. Strange. So I'm gonna set an alert here at 100. Create alert at 100 and save. And then here, yep, so yeah, so that is then a leading diagonal and not an impulse. So I'm gonna tool Elliott wave leading diagonal. So 1, 2, 3, 4, and 5. Yeah, so that, I mean, it might not drop down like this, but that might actually drag out further and whatnot and so on. But I think that's what we're looking at here, that we'll actually also see a bigger drop in Walmart, and therefore now Walmart would be labeled as well. So, and yeah, so let's check. GameStop does nothing. Cool. Cool. It's interesting that that starts to look like a triangle as well. So, and then in that case, this wave here would need to be 61.8%. So, I mean, it's like not perfect, but it's not. So, yeah. So we see again that we are off of that 61.8 with that point here. So not a triangle, but starts to look like one. Where we might see the breakout to the bottom. So that we're waiting for, that I'm waiting for. So, and where did my labeling go? like do we still have our alternative count? No? Like, I don't understand that. Is it because I added the flag to it? That shouldn't matter at all. Like, if we check ExxonMobil, also no labeling anymore, or primary analysis, sorry. And Walmart, still there. Did it disappear? Did it not disappear? So here and here it's still there. ETFs, QQ, still there. SPY, still there. Watch list, AMC, no labeling anymore. Okay, alternative count, no labeling anymore. GameStop, no labeling anymore. Okay, yeah. I really love Motive Wave. Let's say if we see 4 there, it's okay. I really love Motive Wave, how powerful it is. But obviously, yeah, like, I don't know how that happens, like how we can lose our labeling. I mean, I'm sure I did something wrong, like what do we have selected here? It doesn't even show the alternative count anymore. Okay, now it jumps back. Okay, and if we then say load alternative count, now both is here again. Okay, weird. I don't know how I did that, like what changed. Yeah, anyway, I'm gonna take a short break, and maybe if we're lucky, in quotes, we get to see a breakout to the bottom to start those wave 3, 4, 5, and so on, and finish that wave A of the smaller zigzag. And yeah, so I'll be right back, and then we'll take it from there. Just gonna make sure that the screen doesn't time out. Yep. And yeah, so be right back. And back again for a little bit more labeling and GameStop. So we didn't have any strong movement downwards so far. I'm probably going to be online for another 20 minutes or so, then food is going to be ready, and I'm going to call it a day. So maybe we get some movement during the time. Maybe we don't. Time will tell. And yeah, in the meantime, yeah, let's see what happens. Okay. Silos shared his labeling for Bitcoin and has similar target areas, so also expecting a drop there. Yeah, labeling slightly different. Yeah. I can do that in the meantime here, so multitasking, VPN. And yeah. Yeah, I think we're gonna stay with GameStop for the last 15 to 20 minutes of the stream until Irina has the food ready. so I can do a few other things on the side. And I'm gonna get the chat back here, and let's see. Also need to come up with a new name for the streams. I'm not sure if we're gonna keep, I mean, for now we're gonna probably keep with the bi-weekly streams, so Monday, Friday. But yeah, like still, as you guys know, if you've watched the streams for a couple of times, that I'm pretty much restructuring most of my trading efforts. And yeah, like still need to see when and how streams fit into that. And yeah, like time will tell. Also can do that in the meantime. Cool, 3920, 38. Cool, 3920, 38. And where is that now? Maybe I'm too dumb, but I'm just checking some app and I'm kind of like looking for something, and I'm a new feature that's supposed to be there. And yeah, let's finish this task first. So again, multitasking sucks. So 181982. And what's the last invoice we have here? Oh, I should check for updates. That makes sense. So App Store. So invoice was, but I have it up. Ah, there, update. Now open the app, and there we go. And here 3 was the last one, and today is the 14th. 1, 2, 3. Then 2 failed payments. Then that new account. Dup. So that then would then be payment number 4. Yeah, payment number 4. And then payment number 5 is also a new account. And GameStop moves in the direction that we don't expect. So but no strong movement, so nothing to relabel or worry about. So that should be that. So 1, 2, 3, 4, 5. Okay, that's that, and that's updated, and that's also updated. Cool. And then here we can check that, and cool. And the other thing was, that would be an Android, so I can check that only here. But I can already do that here as well. The up. Sperex. So oh, cool, update. Cool. So 35.50, and we say here 39.20. Okay. Ah. It probably doesn't have that. Ah, yeah, that's right. Got it. I also should, yeah, I mean, we had it initially during the streams that we had some background music, and we agreed on that everybody can listen to the music that they want instead of have it in the stream. But it's kind of like missing for me personally to not have music in the background. Yeah, so maybe we'll get that back now. Okay, and how do I zoom in here? Oh, that's not super intuitive here. Oh, sorry for that. Screen timed out. So
Market data connection lost. Market data connection re-established.
okay, I need to disable the timeouts here while I'm working on the other PC. So, good job. Thanks for always helping us with your data. We will all be rich soon. Well, soon is relative. Like we still have to wait for things to get to where we think they should go in terms of can I mark more here? Okay, let's say buy one share, confirm, buy one share, confirm. I'm not talking about shares in stock here, what I'm doing on the other screen. It's like, yeah, buying virtual land in a new crypto app. So there we have this, and then where do we have? Ah, there, great. Now when I have that share, can I basically buy more? Okay, cool. And cool. And when I zoom out, do I see? No, obviously not. Okay, now let's see if we can find. There we have Kiev. And somewhere to the east. Already too far east, yeah. There. Okay, so that doesn't really do anything, but yeah, good to know. And close that, and yeah. So we're still caught up with boring sideways movement here. As said, like very likely, oops, wrong screen and wrong button. So very likely this here is our base channel for this wave, and we basically needed to go down there, and yeah. But on the other hand, we should keep in mind that our, if we zoom out here, hourly or so should be enough, that our wave D here should take technically roughly 2 to 3 days, so it should finish here on the May 24th, May 25th, and yeah, so it's actually more than 2 to 3 days. So we have like, that's Monday, Tuesday, and the other lines don't make sense. Like that should actually be weekly separators, but the week is basically, that's Friday, and weird, yeah. So as much as I love motive wave, there are just a few things that are not done well. Yeah. But yeah, so basically it should take us until roughly here or here in that area, so May 24th to May 25th, to reach that point D and then reach point E and go down here. And yeah, have to be patient to see how that plays out. Now, up and back to 5 minutes, so we see how it plays out. So up. Yeah, Silo says he can relate, never enough time. It's a second job to do the charting, and I definitely agree. Like, you could, I mean, Elliott Wave International actually has, like, if I remember it right, around 25 full-time analysts that do nothing day in and day out, and so like during the working week, then charting. And they have people that only chart, for example, the certain indexes or certain big stocks or certain funds and so on. So it's really a full-time job, especially if we consider that, again, we could at any time have one or more alternative counts that could still turn out to be true. There we didn't label that part, yeah. But what's interesting here is really that that we should see some stronger movement. I mean, I hope I'm still online for that to happen, but might not be, we will see. I mean, here we already have the breakout at the bottom, but that might not be the right way to look at it. If we look at this here, we barely touched it, so we actually should have something happening. I would expect it to go down, but time will tell. Let's see, maybe we get some downwards movement. Ah, so playground in here still exists, so I can open that as I need. Okay, got it. And yeah, let's stay on the alternative count for now to see if we have a breakout of that triangle shape here. Yeah, let's see where we go. God, sometimes I miss the days that we had in like, I mean, obviously back then I wasn't streaming, but in January or end of January, or yeah, close to end of January, where we had strong movements. That movement might some days have been minus 50% or so. Yeah, like, I mean, it's been a while. So yeah, monthly is probably too daily. Yeah. So like that time here where like we also had some sideways movement, but it kind of felt like things are going up. I mean, that was last year, but like here, January was definitely the best month to label and to watch because there were strong movements, then buying restrictions, strong counter trend movements based on that and so on. But if we compare that, like the movements we had here followed then only by a few weeks or 2 weeks of boring sideways movement, strong upwards movement, zigzag upwards movement. But that what we suffer like here since March 27th, so like pretty much 1.5 months, it's literally just boring sideways movements that we get to watch with almost no, that pattern here is obviously irrelevant. And we're still on the alternative count, yeah, so but yeah, so where we compared to now, like there was some movement and now it's just, yeah, boring. That's probably also one of the reasons why I wouldn't necessarily use Elliott wave theory to try to day trade on the 5-minute time frame or so, because in most stocks you anyway don't have big enough movements during the day to, I mean, sure there are big enough movements, and it turns out definitely if you make the right decisions to make a profit even intraday, but considering the effort it takes to label a chart from the IPO on the monthly or 3-monthly or maybe even a yearly chart down to the 5-minute time frame, so you have the proper patterns, and then you need to do that for multiple stocks to identify or to find the ones where you are overall in a wave 3 or 5 or 1, so you know it goes into your trend direction. It's like, yeah, like a full-time job. Yeah. So So will we get to see some movement? Yes, no, maybe, not sure. We also don't have order book information anymore. Yeah, I can't. Oh no, we still have it for now, but it should disappear at some point in the future. Although that's obviously not the full order book, but parts of the data. That information should come actually from Interactive Broker and not from. Actually, in that case, it should come from bar chart as well. It's an interesting question if that is now from bar chart or from Interactive Broker. So we have a few people selling at 160 and basically the biggest buy wall in quotes at 158. And so now it looks like we have our down movement. So I said based on here, yep. So we would want to have a confirmation. So maybe a candle that goes up, touches again, and then bounces off. But that might now trigger the down movement that will make up, eventually finish that third wave here. So 1, 2, 3. Could already, no, 1, 2. Then this is still part of that 3. So 1, 2. Yeah. 1, 2, 3, 1, 2, that's still 3. Yeah, so like stronger downward movement here, which eventually will then finish that wave 3, which then needs to be moved forward. And can also, just for the fun of it, at that same channel here, so we don't have to switch between the charts. Yeah, we don't need the top line, but for, yeah, just to have it complete. Did that update? Do we have? No. Okay, weird. Oh, which means I can also. Okay. Okay. So food is ready, but it's still hot. So I'm gonna stay online for another 5 minutes, and then we're gonna call it a day. Yeah, there's still 2 hours left. However, I said my expectation would be that we go down to somehow finish up this first impulse that makes up our zigzag for our wave A of the zigzag. No, wave B of the zigzag, sorry. the first wave that makes up with wave A of the zigzag that makes up with B of the bigger zigzag. It isn't that hard. And where's my, there, order book icon there. So we have wave A, and this here is wave B, where in my opinion that might be the first wave A that makes up the A, B, C that takes us down here, because wave B in a zigzag often, but not always, subdivides into, or wave B, actually always or not. Let's check the cheat sheet that I don't say something wrong. In a zigzag, wave B is any corrective pattern, okay? Yeah, so not always, but in 30% of cases a zigzag, and 40% a flat correction, so which both would be labeled ABC, 12% a double free, 8% what is the contracting triangle. Might actually be a contracting triangle here, so I think, although I think we checked that, yeah, so wave B could be a contracting triangle. Let's check that in the alternative count here. So that would then be, yeah, obviously not like this, because that would then be wave C. And just to double check for that, not line feature, but retracements. And then 6.18. Might actually be the case, because there, if that is 158, then our wave B here might be a contracting triangle. And it looks like it will be like this, so we might not go that far down here. Yeah, so see, forgetting a few things. So this here might be, as said, a contracting triangle. So with wave C being here, and I mean, it could still go further down and confirm the initial suspicion, but that obviously so far looks nice-ish. And if this is a contracting triangle, then the wave D point would be 6.18 of the first wave. So our wave D point would be from here. So would be 164.60. That would be our wave D point, 164.60 roughly. So like this. And then our wave E point would be B to C, 6.18. So our wave E point would be 6.18 from here, so would be at 159.53, so 159.53 roughly, so roughly here. And considering that we're now going up from the 158, that might actually be the case here. So that our wave B in this zigzag is actually a contracting triangle, although our wave C in the zigzag as a result will be, yeah, like not super nice. So we also have to keep in mind that wave C in a zigzag often can be a more complex corrective pattern, so not just a simple zigzag. Yeah, I mean, 4 out of 5 waves in a zigzag or in a triangle are zigzags, but one of them is a more complex wave, which is often wave C. So that could be the case here, that we kind of like have A, B, maybe C, so maybe that's not a zigzag, but some kind of yeah, like other correction, I don't know. Yeah, we'll have to check then. But based on this, I mean, and then we would have again to consider the time factor. So maybe here we have a fast movement, so that it's like we might get to see today that we see the point D, and then maybe point E again is something that takes longer and would then actually, again, price level was 159.50 roughly, but would then be maybe, yeah, cannot be here because then it would be a breakout from the channel. So actually, although if the D takes longer, then that curve here flattens, but that one still stays the same. So yeah, actually it should be, we might be able to see that today, and it would still mean that we close today above max pain, which means those put or people with put options suffer more than people with call options, which means yeah, like it's good in the long run for people that hold GameStop. And yeah, so cool. I think we should have considered that option already based. I mean, that's like, obviously in retro perspective, it's always easy to say, and it's not yet sure that that will turn out as a triangle. But again, considering the Fibonacci relationships from here in relation to here, it's like almost perfect. We're talking about a few cents that we are off here for a perfect relationship between this wave and that initial wave. And I think we should have been able to come up with that idea already when we saw this 1, 2, and then the start of the sideways movement here. Then it kind of like may have already made sense, yeah. But I somehow forgot, like, because basically in 70% of cases, so 7 out of 10 times, wave B of a zigzag will subdivide into another A, B, C, either zigzag or flat correction. And yeah, somehow it slipped my mind. That's again why I mean, the more you label, the more you apply Elliott wave theory, the more you then consult the book and the cheat sheet to confirm that what you're doing is right. The more experience you have, and the more, the less mistakes like that happen. Yeah, and it would also kind of like fit if we consider, I mean, again, this is not a nice zigzag, but it still is a zigzag. So like we can still label it as zigzag. Now this here is a better looking zigzag, still not perfect, but still better looking, ABC, almost perfect. And then wave C being a more complex corrective pattern. So it's like not just a simple zigzag, but some kind of ABC, I don't know, yeah, like so ABC, something, ABC. So based on this update, I don't like the look of it in terms of this being a zigzag, but again, wave C can divide into a more complex corrective pattern. What if we divide that here into A, B, C, or A, B? I mean, we definitely would have to have one pattern that takes us up here. So if the entire thing is not a corrective pattern, if this entire thing here is not just a simple zigzag, we still would need to, do we have that on the cheat sheet for a contracting triangle? Wave C would be any wave C to D would be any corrective pattern, but not a triangle by itself. So this could be, it's in 70% of cases also a zigzag, but in 15% a double zigzag. Could be triple zigzag, flat, double free corrective pattern. If it would be a double free corrective pattern, then we would have some kind of zigzag or zigzag and flat, or flat and flat, or something like that, followed that the triangle would then be the last corrective pattern. And I'm not sure, like, how could we label that? Like, what does auto labeling do? Probably some crap. Label this at ABC. Although that's by far not perfect. But if we would say that this here is C, then we would need another ABC down here as a reactionary wave. And then this here would be, that might actually, I mean, I'm not saying that it's super perfect, but that might actually check out. So that this is then A, and wave E will be B, and wave C jumps somewhere ridiculous, yeah, which obviously is not the case here. So just get rid of that, and yeah, so first get rid of that, and oops, not that, but no, not the child waves. So then from here we would have another A, and that would be wave B, and wave C would then actually, in our case, add up with our wave D, and we might then get to see wave D sooner, because that obviously doesn't make sense much, but and then that whole thing would be a double free, so a combination that is like W, X, and Y. So in this case, our point D would move further here. Can't say how far further or how much further. Yeah, like maybe there's some information in the book and in the rule book for that, but yeah. But basically, there is a, what did we say? 8% chance. Was it 8% contracting triangle? Wave C, or actually wave D. There's a 2 to, yeah, like a 2 to 4% or 2, 4. No, 4% chance. Yeah, it's some of the numbers in the table don't make sense super much in the cheat sheet, but very small chance, but still a chance that this actually is. Oh, there's triple free. Where was double free? Where do we have double free? Double free is D free. No, double free. Sorry, not triple free. Double free corrective pattern. So that's what we have, like W, X, Y. So based on that, we would now expect it to go up, as said, to 164.50, go down to 159.47, and then from there we would then see another corrective pattern, which would then likely be oh no, that doesn't. My mistake. So obviously double free, WXY, where the first wave is a zigzag. The second wave is, the counter wave is always a zigzag, it's a small one. And then the next wave here is another ABC zigzag, where we have here our 1, 2, 3, 4, 5 impulse, followed by a triangle, which happens in zigzags, again, where did we have contract 8% of the time for wave B, followed then here by another 1, 2, 3, 4, 5 to finish up our point D, which then I would expect happens sooner. And to take us then, and also would then go, well, it wouldn't go higher because the price level is determined by Fibonacci relationships, but which would likely then take us again to 170. And yeah, should then happen within a reasonable amount of time. So by the end of Monday, that we are again at 170. And from there, then we would have our wave E that takes us down again. Yeah, so question is, will it be like that? Yeah. In any case, as I said, my wife told me food is ready, so we'll, yeah, not gonna do that live in the stream anymore. I'm gonna call it a day. I think this is now the accurate labeling. And by the way, so that would be the second time that we have a triangle where the Fibonacci relationships are not only roughly met, but pretty much almost on spot. Yeah. Which, if it plays out like this, it would confirm, it would also actually help us confirm that our bigger assumption that this entire thing here, need daily for that this entire thing here is a triangle, also should be accurate, because it also fits the Fibonacci relationships on spot so far. And which was obviously, I mean, on one hand it would be boring because it would mean that we still have to wait for this to play out. Might not take that long, might happen sooner because wave D might happen sooner, as mentioned. But on the other hand, it would be great because it taught me then an important lesson that I really need to look further into the Fibonacci relationships and double check that they are enforced. Because if they're not enforced, it would always indicate that a pattern is not valid. Yeah. Now here the colors don't add up fully, like basically that here should have, yeah, like WXY, which means that red thing here actually should also be not red but blue, yeah. And as a result then that here also shouldn't be light blue but blue, yeah. And yeah, if that stays purple, that's I guess fine. Oop. But let's check, remove that and move it back. No, it should be red then. Okay, so but yeah, so that's what we would be waiting to see. And then here with wave E, we would have our 1, 2, 3, 4, 5 that also then kind of like would facilitate the breakout of this triangle and take us then up to our 170 point D, probably on Monday. And yeah, so I said with that, I'm gonna go offline for today. Thank you all for tuning in. As always, I know it was not super exciting because all we got to watch was like sideways movement. I think, depending on if you just binge watched or if you paid a lot of attention, I think we covered a few interesting aspects in terms of Fibonacci relationships and alternative wave counts and whatnot. And yeah, what's going to be interesting to see how this plays out today, if we actually manage to go up and maybe even again down. Don't forget, we would expect another zigzag in here, so ABC, and another zigzag in here, so ABC. So maybe we only get to see wave D today and we close above 160. So, but I expect that we close in between here. So even if we don't reach wave D, we would still be in between here. If we, however, would see a drastic move downwards here, which I don't expect because the Fibonacci relationship fit on spot, and then we would revert back to the initial idea that this is like 1, 2, and we're now waiting for 3, 4, 5 to make up the first leg of the zigzag that could be in there. Yeah. But yeah, so thanks everyone for tuning in. I wish you all a pleasant weekend, and yeah, so till probably Monday. Don't forget, I will schedule the streams by Sunday evenings, or this time on Sunday. And yeah, like the one thing that you can do if you don't want to miss a stream is hit the subscribe button and enable the dumb bell icon so you get an email whenever I go live. And yeah, so yeah, thanks Ross, and yeah, like great and pleasant weekend to you and everyone else. So till next time, bye bye.